Good morning, everybody. It is Friday, September 20th, 8:47 a.m., and we are back once again on another episode of The Market Open. It's Friday, folks. It is Friday. This week, I think, has gone pretty fast. I would argue it's gone fast. Let me know in the chat if you think it went fast. I mean, even when I woke up today, I was like, it's Friday. It was a pretty quick week. Monday, we had a couple days before the FOMC meeting. Then Wednesday, we had the meeting, got 50 bips. Today, we're actually going to have Palantir included into the S&P 500, so we'll see if that has any impact on the stock in terms of the rebalance. And then yesterday, we had one of the best days in the market in 2024 because the market positively reacted to the decision from the Fed. So, I mean, overall, it's been a pretty quick week, very fun week. Today, we've got a lot of things to talk about. We'll have TJ joining at about 10 a.m., and we will go through the public portfolio. We weren't able to do it last week because I was at AIPCon, so we're going to go through all the different moves we made and different things we're thinking of doing with some of the capital that we freed up. Karp, some sales of Palantir. I want to talk about that. Last night, that news broke of Karp selling about $325 million of Palantir stock. So we'll talk about that, discuss that, go further in depth on it. Nike CEO got booted, got the boot. Stock's up 10%, and it's got to be the most insulting thing to see. You get fired as CEO, and then the company goes up by $10 billion of market cap last night. So apparently that CEO was worth $10 billion more to the company. And Buffett is selling a bit more. Bank of America. We'll talk about that now. It's getting to the point where about $294 billion of cash he has. You're getting close to $300 billion. And obviously we're going to see what Buffett has to do, or what he's going to do with all that money. Thank you, everybody, for being here. All right, so 2 questions. We're going to get started with 2 questions on this Friday morning and keep things going. First of all, I can see all the Steve Jobs jokes already. All right, I saw this in my closet today. I found that leather jacket on Wednesday for the FOMC. I found my turtleneck. I haven't worn this in, I think, like a year. And I was like, oh, good. This is what happens when you clean your closet. You find all these clothes that you bought years ago. I bought this in 2018, dude. I remember I bought this with 5 other turtlenecks of different colors. They were like $15 each or something. And I ordered it a long time ago, but then the clothes get lost. So yeah, we busted that out today. 2 questions. Number 1, we're going to do this because we haven't done this for the past couple weeks. Where are you watching from? So let's get started on a Friday morning. Where are you watching from? Let's see where people are from. And then number 2, given it's Friday, what is your typical Friday like? What do you do on Friday? You kind of just chill out? For all my corporate people that are at their jobs, you basically do nothing on Friday because it's Friday. And at this point, you're so done with your boss. You're so done with the emails. You just don't care anymore. What is your mood on a Friday? Let's see what people have to say and kind of how you take that. All right. Let's see where we got everyone across the world. We got Alex from South Texas, Angad from Long Island, Ryan from Houston, Ricardo from the Netherlands. We got Romania, Brampton, London, Portugal, Norway, Texas. We had a lot of Norways here. Another Norway, Bahamas. I love that. Australia. I've got to go to Australia next year. I feel like it's my destiny to go to Australia. I'm definitely coming to Texas next year. I was talking with some people last night. We're definitely going to go to Texas and try to have a little bit of a Texas meetup. But I think next year, every month, I'm going to try to go somewhere new and just meet a bunch of you guys. Miami, East London. We got Greensboro, Palm Beach. We got Dom working from home in Philadelphia. I love it. I watch you all morning while I code at work. Okay, see, that's very cool. And I'm sure you can probably have me in the background while you're coding, which makes a lot of sense. We got Walt, who's from Massachusetts, but he put that there probably because he wanted me to say that word as well. Germany, Boston, UK, West Palm Beach, Austin, Atlanta, Denmark, Kentucky, Long Island, Misty from Georgia, Ricardo from Portugal. Layla says Amit's found a girl on here. That's why he's all dressed up. That's hilarious. Seattle, Manhattan. All right. All across the world. All across the world. I love it. I love it. I love it. I love it. We got a lot to talk about today, a lot to discuss. My answer to that question in terms of on a Friday, what happens is, it's interesting. Friday is always my day-to-day doesn't change. Do the market open, do the market close. But after the market close, I think for those few hours, usually, I actually go on a walk after the market close. Friday, I tend to get out the house and just go on a walk. And then I'm back for Palantir Weekly at 11 p.m., which we will have back today. We were gone last week because of AIPCon. But we got a lot to discuss in the context of Palantir as well. Metro, Detroit, Orlando, Singapore. just all across the world, dude. It's so cool. So cool every day seeing everyone all across the world. Luke says mail it in Friday. Yep, I would imagine. I watch you while I pretend to work on Fridays. Okay. I love it. All right, so let's get started with the show. We got a lot of stuff to discuss, and again, we will be having TJ join at 10 a.m., go through the public portfolio, see all that stuff, and then keep going from there. Also, FedEx earnings, did some digging on that. Kind of bullish, kind of bearish, but we got to talk about that and go through kind of what's going on there. All right, so I think let's start off with Palantir. Alex Karp sold $300 million of Palantir. Now, this isn't really big news if you didn't know about the fact that he sold 4.5 million shares the other day and then 4.5 million shares like yesterday. So, or not yesterday, 2 days ago. So in the beginning of the week, he sold 9 million shares on 2 separate days and or 4.5 on 2 separate days. That's how you get 9. And that's yesterday. It started going a little bit mainstream. Some of the like bigger Twitter accounts started picking it up. Some of the Wall Street Journal like article types of people picked it up. And that's how people started thinking about it. So what are my thoughts on this? Now, there's a couple of nuances to this. Number one, first and foremost, before we get into the technicalities of it, he deserves to, right? I mean, the stock's up 115% year to date. If a company has executed and that's why the stock is up, not that the stock is up simply because they've like raised money or did dilution or whatever, then the fun thing about this is you can sell with him, right? So it's one of those things where I think it's very weird when people get upset about this. I would understand if this is GameStop and the stock is up for like no reason because of a meme that Roaring Kitty posted and then the CEO selling, because then he's literally just taking advantage of like a short-term moment of opportunity because this guy posted a meme. If the company has executed dramatically, and we don't have to go through all the different things they've done this year, but obviously it's been pretty dramatic in terms of their execution, S&P 500, yada, yada, then I think insiders deserve to take some profits, especially if insiders have been there for 20 years. So that's the first thing I'll say. High level, and if you hate this move, then you are allowed to sell with him, or at the very least sell covered calls with him, or sell covered calls against your shares if you think that they're going to be under a lot of pressure. So I think that's kind of the first high level thing. Second thing is the technicalities of this. So from reading the SEC filing last night and actually going through it, there's 2 nuances of this. Number one, it seems like a lot of this was for taxes. Now, why was this for taxes? Well, when you get a stock option, you have to exercise, or when you exercise a stock option, you have to buy those shares, and to buy those shares, you have to sell other shares, not only to have the money to buy those shares, but also to pay the taxes on the shares that you're selling. So you have to sell an additional amount of shares. So from what I'm understanding is that both sales of about 160 million were related to the exercise of vested stock options. And I'm assuming he was granted those stock options because of either milestones that the company hit, or because he's been there for 20 years and you have certain cliffs where you get vested certain stock options. People that work in corporate America in the chat, I would imagine, you guys have stock options and you know that you have to stay at a company for a certain amount of time and it's vested. Also, for the people that have stock options in the chat, it's a really dicey scenario. When I was at the Robinhood conference, I was speaking to a couple of people who got their stock options, and the guy who was setting up the podcast for me and Vlad at the studio, he was like on their audio video engineering team. And he was like, dude, like, I love Robinhood, but I joined when the stock was pumping and my stock options are at 40. And it's like, is Robinhood worth $40 today? You can make a case for that, but back in 2021, it was not worth $40, right? There was a massive interest rate bubble. And so when you join like the people joining Palantir right now, getting their stock options at 35 are definitely not getting the type of benefit if you joined, like one of my boys in New York joined when the stock was at 6. So his stock is up, a couple 100,000 right now. And it's just because he joined at the right time. So a lot of it is based on timing. Obviously, Karp has been there for a long time. So I imagine the average on his shares are like either pennies or low single digits. So what it says right here on the SEC filing, the reporting person executed 4.5 million vested Class B common stock options, converted the resulting shares of Class B common stock to Class A common stock, and then immediately sold those shares on the open market. Meaning he sold to cover his taxes, he sold to pay for the vested shares that he was granted, and then on top of that, he probably sold to also take some profits, which is very fair in my opinion, given that he has, built a company and rewarded shareholders by the nature of the stock going up over the past year. So those are my thoughts on it. It's really not that big of a deal. We got Jeff right here that says he has 9,600 shares at 1050. So here's my thing. If you bought at like 33 and you're uncomfortable with Karp selling and you want to take some profits because Karp selling at 36, then you can make that decision. For someone who has an average like Jeff at 1050, where the margin of safety between your average and the stock, even if the stock was to fall another 50% from here, which means it would be $18, 36 to 18, and you would still be up almost 70% from Jeff's average, that's where you're just in the sweetest position ever, right? Because you are so in the money, technically. I know it's not an option, but you're so in the money in terms of where your average is, you call it your strike, compared to where the stock is, that you can handle a lot of volatility and still not feel all the pain of the stock going down. So, yeah, from that perspective, again, it's fine to take profits, but also if you have a small margin and you still believe, the company can do very well, then I think it's important to think about the long term. Now, the second thing about this here is I don't think him selling means that he doesn't believe in Palantir anymore. A, because it was for options. B, it was because he was granted stock. B, because he also had to pay for taxes. And C, because he still has, from my understanding, about 60 million shares left. So I think this was 7 to 10% of his stake, which is fair. He's 56 years old. He's been in the company for 25 years. It's fair to sell 10% of your stake after the stock is up 115% in 1 year. I don't think he knows if the stock is going to be up another 115% next year. Odds are it probably won't. And so as a result of that, you're coming in here and you're trying to take some profits. So last two things I'll say on this is, from a bearish perspective, to give like another angle to like the people that are thinking, oh, this is the top. You might be right. This might be the short-term top right now. If Karp is selling shares right now, that means he has financial advisors that are probably a lot smarter than him in the context of like valuations, because I don't think he thinks about that all day. I think he thinks about like executing against the company, where they're going up to him and they're saying, hey, Palantir over here down about 2.5% of the pre-markets. Hey, the company's worth 82 billion. You guys are barely doing 500 million in profits. Most of your profits are coming from treasury incomes. By the way, the interest rate you're getting on those on the 4 billion in cash in T-bills just went down by 50 bips. We'll talk about money market funds in a second as well. And now you need to increase adjusted operating margins for you guys to have actual income from operations to be able to justify the EPS growth over the next couple of quarters. And so I think his advisors are saying, hey, if you guys don't execute perfectly over the next 4 quarters, this stock is so priced for perfection. I mean, it's beyond perfection at this point, that yeah, there might be a pullback and you might not get this opportunity for a while. And I think Karp's probably looking at them like, yeah, that's probably true. And I think that has happened in November of 2023, when the stock was like touching $22, $23. It was still kind of overpriced for its growth because the growth just wasn't there, right? The growth came this year in 2024. That's when Peter Thiel sold about 25 million shares as well. And then the stock stagnated for a good 7 months, and then it broke out. So are we in that situation where Karp's kind of calling a top in the short term? Maybe Thiel sells. We haven't seen a sell from Thiel yet. We kind of consolidate from this 30 to 34 range, maybe touch 27 again. And then we stay there for 7-8 months, and then we make the next leg to 40. Maybe. Or to give the bullish perspective for the bearish perspective, maybe his advisors are also like, yeah, the stock's overvalued, but there is so much liquidity that you can like take advantage of selling, and it's really not going to affect the stock. And the stock just goes to 40, 45 in the next couple of months because it doesn't matter, because everyone just wants the stock, and people don't care that Karp sold 9 million shares. I think both things are possible. We're going to find out what happens. S&P inclusion is today, but I think some of the people that are freaking out about him selling, I mean, the only time I take those seriously is if the stock is up for no reason and the company hasn't executed. Then I'm like, yeah, the CEO's cashing out, which we've seen many times. We've seen many examples of that in the stock market. I don't think this is one of those situations. So from that perspective, that's what we got on Karp selling shares. And if you hate it so much, you can sell along with them. If you don't, then I think he still believes the company can be 10 times as big. And over the next decade, he will be selling periodically, because that's just what you do when, a company grows. And for the long term, we'll see what happens. The final thing I'll say on this is that, he has 60 million shares. A lot of people in the chat have 10,000, 5,000, 4,000, 3,000, 2,000. If you just don't have as much as he has, it's also a question of like, okay, so I want to make this stake grow really big. He has a stake that's already really big. So he's just doing kind of risk mitigation on his stake, whereas other people want the stake to go bigger. So it also puts it in context. If you have a small amount of shares compared to what he has, what does it mean for him to take a little bit off the top versus you to just allow that to grow over time? So those are my thoughts on it. Those are my thoughts. And I think that's what we got right now as well. All right. So that's what we got for Karp. Don says I have 500 shares of Palantir, $9 average sold covered calls yesterday. Yeah, the covered call premiums are amazing. I don't blame anyone for selling covered calls, and I think you can navigate the covered call from around 32 to 36. Now, if it blows to 50, then all right, it's going to be hard to navigate it. But if it blows to 50, theoretically, I think, that's going to be very unsustainable, and, we might see some volatility there. So I think managing covered calls here is not horrible, but you might also be in a situation where you're stuck with them for a while. So you just have to do it at your own risk. But I also think it's not the worst thing in the world to do that as a way to hedge. Bsoft says anyone who's mad about the sell is irrational. Everyone would sell in that position, but I will say it does signal that he thinks it's a good time to sell. Exactly. That's exactly Bsoft basically just summarized what I said for 10 minutes. I think being mad about the sell is irrational, but obviously it does signal that he does think it's a good time to sell. We got Adam right here, been rolling covered calls for like 2 years. I was on the phone with Adam yesterday. Adam's literally been collecting premium for years, rolling his covered calls and protecting his shares. He's become like a G at understanding how to roll. So if you understand how to roll as well, that helps. Also, by the way, quick thing for people, some people were in the comments yesterday because we were talking about options saying, hey, how do I learn about options? Honestly, dude, if you go to ChatGPT and you say, hey, ChatGPT, tell me about the basics of calls and puts, it is now replacing YouTube for me in terms of learning a new idea. So when I'm very curious about sort of internal dynamics around theta decay and what does it mean to roll an option. I was asking ChatGPT yesterday, okay, let's say I have a stock at 20 and I have a covered call at 25, but the stock runs to 30 or the stock goes to 15. What are the premiums going to look like? What are sort of the ranges I want to be when I try to roll that position? How do I navigate that? It was amazing. It was amazing. And so I think a lot of people say, how do I learn about options? I think you can literally give ChatGPT these hypothetical examples that you can't do on YouTube, right? Because it's just some guy talking. You can't be like, hey, blah, 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 plug these numbers in. You can literally use AI, give it random examples, and it does such a good job breaking out every single perspective, and it just helps you learn a lot more. So as a learning instrument, this is one of the first things I'm really using ChatGPT to kind of test how much does it really know, and it's not bad. It's not bad at all. So I think for those that want to get started with the basics, yeah, YouTube videos are fine, but also having something you can interact with, like right in front of you, that's also not the worst thing either as well. Okay, cool. That's what we got. Oh, the final thing. Let me just comment this from Dougie. So there was a rumor going around on streetinsider.com of a block sale of 10 million shares, which would be a secondary offering. Now, this is a rumor, so there's two things that could be true here. A, either Palantir is offering 10 million shares on the open market at $35, so they would raise 350 million. That's one perspective, which would be dilutive to shareholders. Or B, the other rumor I heard is that employees are selling 10 million shares, almost like a DPO in a secondary offering to whoever is willing to buy it in the public markets, and that's like employees offloading some of the shares that they've had for years. I don't know which one is true. Two thoughts on this. Number one, if Palantir is actually raising $350 million, I have two questions here. Is like, A, why are you doing it? Because you have $4 billion in cash, so I'm not really sure. Maybe we'll get clarity on that. B, kind of can't blame them. I know it's dilutive to shareholders, but I mean, raising $350 million right now is probably awesome, and that $350 million they could do a lot of stuff with. And if the market's willing to pay you $35 a share, if they're obviously thinking, hey, the stock's not worth 35, but there's so much liquidity, maybe we raise this money. The reason I don't care that much about it is because 10 million shares compared to a 2 billion float, it's just like, it's not, it's like, they're not doing 30, 40, 50. It's like a small part of the overall float. And so you might not get this opportunity again. So I don't think it's the worst thing in the world, but yes, it is dilutive. Don't love it. Don't think it's happening either. I think the rumor about the employee sell is more accurate based on what I was reading, but we're going to find out in the next couple of days. Morgan Stanley apparently is the broker that's doing this 10 million share offering. And if it's employee selling, I don't really care because, employees have been there for years. They probably want to take some profits. That's fine. But if it's dilution, I would be curious, why do they need 350 million other than they think it's a good time to, raise that type of money. So we'll see what happens there. But the big news was the Karp sell. And ultimately, I think he deserves to take profits, and it's not that big of a deal given he's paying for his taxes as well. Okay, cool. So that's what we have with Karp. Let's talk about our boy Buffett and what he's doing. Actually, before we go to Buffett, let's go to a good chart. I want to show you guys a chart that's going to make you sleep well at night, because that's my job, to help you sleep well at night. Literally, I know some people listen to my voice to sleep at night, which gives me a lot of joy. All right, so here's the chart. Here's what we got in this chart. Now, also, I talk about the bear case as well. I also probably bring up stuff that doesn't help you sleep well at night, but you can't deny history, and you can't deny some macro indicators that are a little bit more bullish right now. Here we go. When the S&P 500 is within 2% of an all-time high, which it was on Wednesday before the Fed cut rates, and then the Fed ends up cutting rates, historical data shows that the index has increased 100% of the time over the following 12 months, which means a year from now, since 1980, and with an average return of 13.9%. So if the S&P 500 is within 2% of an all-time high, I think on Friday, the S&P was at like what, 555, or sorry, Wednesday, 555, something like that. And the all-time high was 565. So it was within 2% of that all-time high. And then the Fed cut rates 100% of the time. And we've seen this happen over the past years in these examples. The next year, you've got a 14%, 13.9% average gain. Over the next month, you're down on average 0.2%. Over the next 3 months, you're up 2.1%. Over the next 6 months, you're up 3.8%. And over the next year, you're up 13.9%. This is from Ryan Dietrich, who comes up with all these charts and looks at this historical data. Last time this happened was actually October 2019. The S&P 500 was 0.08% away from an all-time high. Then the Fed cut. And then we went up in the next 3 months. Next month, the next 6 months, we went down 7%, but that's because COVID happened. And then within the next year, it was up 8.6%. So if this historically is going to play out again, then in 2024, we were 0.58% away from an all-time high. We just cut, and we're going to see what impact that cut ultimately has on the markets over the next 12 months. You're not adding 2001 or 2007. So remember, 2001 and 2007, the reason that's not added in this list is because the S&P 500 was not within 2% of an all-time high before the Fed cut rates. Also, this is a really good topic to bring up. 2001 and 2007, a lot of people were talking about this yesterday because Meet Kevin tweeted some picture of like, hey, on September 18th, 2007, like the Fed cut by 50 basis points. This is very similar to what they did right now. I get that. And like, that's like a fun headline, and you know, it can get people's attention. The problem is, and again, I could be wrong on this, but this is a very, I feel like, honest question to ask. In 2007, there was a housing bubble. In 2001, there was a dot-com bubble. Every time people want to compare this time to 2001, 2007, no one wants to bring up the bubble that is like undergirding the 2024 stock market that is going to blow up when we cut rates right after that, right? Or when we cut rates right before the bubble theoretically blows up. So the example of that in 2007, well, the NASDAQ goes up 12% right after the first rate cut, and then the bubble pops, and people are saying, oh, well, don't be happy right now. This is like a dead cat bounce. We're getting all this momentum, and then boom, it's going to pop. Well, what's going to pop? Like, what's going to happen? Because those people are not talking about unemployment. They're not talking about inflation. They're not talking about retail sales or any of these idiosyncratic ideas that we care about in the market to try to get a gauge on what's going on. They're talking about a legit bubble. So my question is, what's the bubble? And if the answer is AI, well, I just don't know if I can take that seriously. I don't know if there's an AI bubble. I personally don't believe it. If there's a lot more evidence for it, then that'd be nice. But the valuations, I mean, the NASDAQ's not even at all-time highs yet. Tech corrected. Google's trading at 21 times earnings, and Google is supposed to be like this massive AI company. I don't think there is a huge AI bubble. You can say Microsoft and Apple are overextended, but Microsoft and Apple are not bubbles. I could see Apple going back to 200. I could see Microsoft going back to 400, which would be 10% down from where they are right now. That does not mean they fall 30, 40% and they're bubbles and they're selling fake stuff. And, AI is just not real for any of those companies. By the way, Marc Benioff did have some things to say about Copilot that we'll talk about. He gets a nice choice of words about Copilot because he's competing with Copilot now. But that's what I'm curious about. If 2024 is going to be the same type of bubble, then what's going to pop? And I think we need like a better explanation of what the pop is going to be in order for us to make that comparison without just constantly fear mongering. And I'm not saying there isn't a bubble. I'm just confused what the bubble is. The bubble is a combo of index investing and risk-free returns. Okay, so you can make an argument that a lot of these passive flows going into index funds are the reason why big tech is up right now. But I would like look at their balance sheets, their income statements, their earnings, and just be like, all right, so yes, they're passively investing in Microsoft, Amazon, etc. But the companies are justifying a decent amount of the momentum, even if you want to give them 10 or 20% down from here. And then risk-free returns. This is interesting because this gets us into money market funds. This could be interpreted theoretically as a bubble, but if that bubble is going to pop, maybe that bubble pops and all that money leaves and it goes into the stock market. So you can see right here yesterday, total money market fund assets decreased by 20 billion to 6.3 trillion. This is the first decrease we've seen in over 5 weeks. The past 5 weeks, we added 200 billion into money market funds. It didn't even take 24 hours for money market funds to start decreasing based on J. Powell lowering rates by 50 bips. Robinhood decreased their APY. They decreased their margin rates. Truist decreased their APY. I'm sure a lot of you got notifications yesterday from Wells Fargo and Bank of America and Citigroup and all this stuff of their rates being decreased, especially on high yield savings accounts. So it started. And now officially, you're going to have people wondering, hey, do I like getting 4.75 versus 5.3% in my money market fund? And maybe a lot of people will say, you know what, that's not that big of a deal. But there's also at least $20 billion yesterday that decided we're going to leave. Now, does that money go to the stock market? Maybe. Does it also go to crypto? Maybe. Does it also just kind of stay kaput and waits for a crash and then goes into the stock market? Maybe as well. But if that money starts chasing and like tries to get some type of yield, maybe that bubble actually helps the broader stock market as well. Someone says, Amit, the dot-com bubble is like AI. The internet is a real thing, just like AI, but the valuations of some companies were priced 10 to 20 years into the future. AGI hasn't arrived yet. This is a fair argument, but now I want to know the examples. What AI company in the stock market, because forget the private market, because I don't think the private market is a fair comparison. So you can't just scream OpenAI because A, there's only a couple of unicorns in the private market that are getting these crazy valuations. And that's because they have the best foundation models in the world. So I don't think that you can say that's a bubble. B, that's not 2001 where pets.com went public and had no revenue. So like if they're still private and they're not wasting like stock market liquidity, they're just wasting like venture capital liquidity, then it's like not as big of a deal, especially if those are some of the best companies in the world. So what company in the stock market currently is so overvalued, so egregiously priced for its AI thematic that it justifies the entire United States financial ecosystem collapsing because that's the same as strippers getting a mortgage in 2007? What company? Like really, what company? I know some of you will be funny in the chat and say Palantir, and but like seriously, what dude? I didn't even I didn't have to wait 2 seconds before I saw that. I didn't have to wait 2 seconds. There's like 20 Palantir comments. I love how we're all Palantir bulls and we're like, it's Palantir. It's like it's Palantir. At the end of the day, it's Palantir. Could you imagine it would be Palantir? But no, seriously, what company besides Palantir, which yes, the valuation has gone to the moon, but that's because Karp is Karp, and Palantir. We talked about the cool premium that Palantir gets, but besides Palantir, seriously, like what company is getting that type of a crazy valuation? You walked into that one. I definitely did. Someone's going to clip that. Someone's definitely going to clip that. Snowflake's been cut in half. It's not Snowflake. I mean, let's just look at the AI names right now. Like seriously, I want to because this is a good thought experiment to try to figure out how serious is this bubble. By the way, Nike right here up 8%, S&P 500 down just a little bit, but still at 568. Let's go to the SaaS names. I have a list for AI. So we have Datadog, Oracle, Snowflake, AI, C3 AI. That one valued at $3 billion. I don't think that's like crazy egregious. And then Palantir at 3683. In other, if you want to go to the semis, I mean, I can give you some of the semis are overvalued, but they are putting up a lot of growth. They are important. And until NVIDIA pops, if you think NVIDIA is a bubble, which based on the CapEx spending from the hyperscalers and based on their guidance for Q3, I don't see that as a bubble. Then I'm curious what other companies. Here's all these SaaS companies: Twilio, Zscaler, CrowdStrike, by the way, is up 1.5% because they got upgraded after their investor day by a bunch of these firms. But they're also down 20% for the year. So it's like even CrowdStrike's not even at that crazy valuation. Salesforce got hit this year. Datadog. Like what company is out there? Like if this was 2021, I would tell you that Meta did not deserve to be a $1 trillion company in 2021. If this was 2021, I would tell you that Ginkgo Bioworks did not deserve to be worth $15 billion. Right now, it's worth $461 million. There was an obvious bubble in 2021 in hindsight. In 2021, it was kind of hard to see. And I'm trying to find out where's the obvious bubble right here that we don't need hindsight to try to figure out. Amit, you see the AI private startup companies drive up a lot of demand of the public companies, specifically NVIDIA. If private companies start going under, NVIDIA chip demand will slump. That's a fair point, but then you have to basically think that every single private startup getting funded via AI is a loser. All of them are going to fail, and then there's going to be no GPU demand. Dude, most of the companies that are getting all the demand from NVIDIA that are private, honestly, are the companies that are the winners already, like OpenAI or Cursor or what's the other one? Remplit or something. It's another AI coding tool. There's a couple of these AI arguments or AI companies that are buying up a lot of the GPUs, but they're the ones producing all of the growth, right? So are there some tiny little small AI startups that are getting $4 or $5 million valuations and they're buying a little bit of compute from the hyperscalers, and that's how Google gets to justify buying all this compute or buying all these chips from NVIDIA? Sure. But like the big AI startups that are out there that are raising real money, Character AI that got a $2 billion licensing deal with Google, they are putting up some serious numbers. Maybe not profitable numbers, but they're putting up numbers that are like, and as a startup, all you're betting is on the potential of their growth, and they're putting that up. By the way, speaking of startups, we got Karthik right here saying Cursor is phenomenal. See, so we got people in the chat that are actually using these companies. And so I think those valuations, yes, are they kind of a little insane? Sure. Are they like, oh my God, egregouspets.com going public? No, because these are some of the most important AI companies, and they're the ones that are getting most of the demand from NVIDIA. Okay, here's a question to you guys. I got an offer last night. and I'm still trying to figure it out. I asked a couple people, got their perspective. But speaking of startups, and I'm still torn on this, would you invest in Anduril if you could invest in Anduril? Would you invest in Anduril if you can invest in Anduril? Call it 20 billion valuation. Would you invest in Anduril at 20 billion? Put it in the chat. Would you do it? Because I want to, but I'm also like, man, I don't know. That's 1/4 of the market cap of Palantir without any commercial business. They're not a software company. There is software part of it, but obviously they're a defense contractor, so their margins have to be hardware margins. And I don't know, is Anduril going to be the next Lockheed Martin? Like, it's a tough one. So let me know in the chat if you would say that. Is Anduril at 20 billion a bubble? That's also a question. Is Anduril at 20 billion bubble? I don't think it's a bubble, but curious if you think like that. Yes. Someone saying yes. Mega unicorn. No. I don't have any financial data. No, I have nothing. I literally know nothing other than the fact that it's a hardware contractor and there's an SPV, special purpose vehicle, that's raising some money. And I could get into it, but I also don't know if it's worth it. Anduril's business is defense contracting. It's mainly defense contracting. I asked a couple people last night, and some people are like, "Hey, the TAM is limited. It's defense contracting." And some other people said, "Well, the world's getting kind of fucking crazy, and so if the world's getting crazy and defense contracting matters, maybe there's a moat there." I'm just trying to think. It's a $25,000 minimum I'd have to put in. I'm trying to think. Hey, is that 25,000 better just than Palantir over the next 10 years? Or an Anduril. Like, again, the whole point of investing in private companies is you get a really discounted valuation. 20 billion does not feel discounted. Like, Figure at 2 billion, that felt discounted to me. Like 2 billion, all right, that to go to 10 billion, boom, there's my 5x. But Anduril would have to go to like 100 billion to get a 5x, or even 40 billion to get a 2x, which I don't know if that's going to happen. So that's one of the things I'm thinking about. But from that perspective, again, even Anduril at 20 billion. By the way, Anduril did raise at 15 billion a couple of months ago. Anduril right here, yeah, it's not even a couple months, August 7th, yeah. So they raised at 15 billion. So this is all public. You can see right here, Anduril raised 1.5 billion to rebuild the arsenal of democracy. Oh, this is a $14 billion valuation. So the SPV offer I'm getting is 9 billion or 6 billion more than this previous valuation, which is, I mean, it's a lot more than 14 billion, but it's not like, a $40, $50 billion valuation or anything like that. So they already raised 1.5 billion. So here's another question going into the bubble. Is this a bubble? Is Anduril raising 1.5 billion a bubble? Is defense tech a bubble? Is this just like, oh, America or venture capitalists just care so much about defense right now because they're enthralled by the Ukraine war and potentially China, Taiwan, and therefore they're giving this money to a company like this? I don't think so. I don't think the AI companies are in a massive bubble. I don't think OpenAI at 150 billion is a bubble. I think it's a pretty steep valuation. But I mean, if Apple, NVIDIA, and Microsoft are begging OpenAI to take their money again, I don't think that's a crazy bubble. And then if all the VCs, here are the VCs right here, are ready to give Anduril 1.5 billion because they believe that the next revolution in defense is going to be led by a company that's just fundamentally differentiated from the Lockheeds and the Raytheons of the world, is that a bubble? Like, all these examples we're seeing back and forth don't lead me to believe that 2008 is this massive bubble, or 2024 is this massive bubble comparable to 2007. Thomas says, I have absolutely no idea because there's no numbers. Well, that's the whole point of a startup, right? You kind of don't know much about it. You just throw it in there and hopefully it happens. Same thing with Figure. I mean, there's no numbers with Figure. I mean, Figure is a very 2-year-old company. You're just betting that, yeah, humanoid robotics are going to win and that Brett is going to take it over. With Anduril, it's like, yes, defense is going to be important. Palmer Luckey's the guy. And not fully convinced on that thesis as like a return on investment, but primarily because it's the valuation. Whereas Figure at 2 billion, at least it's worth the risk to see if that could happen. So yeah, I guess we'll see. But again, it just doesn't feel like that bubble argument necessarily is common here. But again, does anyone have another ticker besides Palantir that publicly is a bubble? Matt says, want to invest in defense, Rocket Lab at 3 billion, market cap 20 billion. Bro, all right, what do you guys think? Would you rather put 25,000 in Rocket Lab at 3 billion or 25,000 at Anduril at 20 billion? That's a hell of a point, dude. I can't argue with that. Rocket Lab, 25 grand in Rocket Lab at 3 billion. It needs to go to 6 to what's Rocket Lab's market? Is it still 3 billion? Rocket Lab? There's no way it's 3 billion. It's like 5 billion, right? Holy shit, it's 3.5 billion. Oh my God. That's a hell of a point, Matt. I can't lie. I mean, the only reason I would do the Andrew thing is like look cool at that point, because I don't know if you could justify 25,000 if it's just about return on capital into a $20 billion private defense company that might not go public for the next 5 years versus a company that's already public. And, you know, we have so much due diligence because Matt Money dedicates his life to this and because Peter Beck is an amazing guy. Yeah, I feel like the Rocket Lab argument is much easier. That's fair. That's a fair point. That's a very fair point. Can't argue with that. Again, if Anduril was 10 billion, I think I would do it because then it's just like, then it makes sense. But at 20, like when I got the number yesterday, I was like, all right, this is up there. This is up there a little too much. Okay. Yeah, I think it would be Rocket Lab. I'd put it in Hood. Well, I put a decent amount in Hood already, so robbing it right here, 2281, flat in the pre-markets. S&P down about 0.24%. Palantir down 2.47%. Palantir is getting included in the S&P 500 today, so we'll see what happens to Palantir. But this will be the day that gets rebalanced in Bitcoin right here, 63,000. So it seems like no one in the chat can show a ticker that is massively overvalued for the AI thematic. I don't think anyone can show the ticker. No one has a ticker besides Palantir, which I would agree with as well. It's so funny because like when I'm on Twitter and everyone's like under my comments like Palantir's overvalued, Palantir, I'm like, I don't disagree. You've got all these like people who are like upset that like, why are you talking about Palantir? It's so overvalued. I'm like, dude, like, yeah, it is, but like, so what? You know, it's like I'm not trying to be like, if this was a $6 Palantir stock, I would actually have a debate with you. At 36, I'm like, yeah, I feel your point, but I also know you're very upset because you missed the whole story. And if you got into it at 6 or 7 or 18 or 25 or whatever, you probably wouldn't care that much that it's overvalued because you would just be having fun in the overvaluation. Sometimes you also just got to enjoy the moment, dude. You got to enjoy the fact, like, come on, bro. All of us invested in this company when this shit was like seen as a turd that was never going to go anywhere. And Karp was seen as the craziest guy in the world who didn't care about returns and anything. And now it's the second best performing stock, or not second, but it's like in that top 10 best performing stocks. And it's 20% away from beating NVIDIA's return for the year. I don't know if we go up another 20%. But you got to just enjoy that moment, dude. I mean, that's a hell of a story, hell of a moment. And we might not get that next year. So it's important to at least enjoy that time. All right. So no one's mentioning a ticker. So I will take it as no one has a ticker that is so egregiously overvalued that it is similar to strippers getting a mortgage in 2007. And that led to the collapse of the financial like structure of America. I mean, like, I don't see the ticker. If you want to see the S&P 500 is overvalued, the market's overvalued, that's fine. But like an actual ticker that is emblematic of overvaluation, like we saw in 2021 with SPACs, I don't think a lot of people have it. I don't think a lot of people. Again, it has to be like ARM. Okay, so I personally am biased against ARM. I think it's a bit overvalued, but still, like they're used in a lot of stuff. Like you could make the bull case for them, even though you could say they're overvalued. But I think ARM's not the best example. We got to have a really big mainstream company that has sucked in so much investor capital that when it pops, right? And that creates a snowball effect, like the housing crisis. And I don't know if that's necessarily what we have right now. Here's Marc Benioff. We were talking about him speaking on co-pilots. This was his take yesterday, and this is the AI wars heating up between Salesforce and Microsoft. He said something very, very interesting here.
Out agents now, ServiceNow, Microsoft. How do we know this isn't just another buzzword like Copilot?
Well, I think and we all know now that Microsoft Copilot is basically the new Microsoft Clippy, that customers have not gotten value from it. You know, these LLMs, this is like, we're selling science projects to companies and they're tired of it. They have not gotten the value, which is why you see these customers so excited. They're coming here and they're getting immediate value. And they're able to use this next generation platform to do everything that they've heard that's possible. Create an agent is a great example. How do I fine tune an agent? How do I create guardrails for an agent? How do I ground an agent in data? Well, all the data is in the Salesforce platform. All of the metadata is there. The logic is there. The workflow is there. They're just adding agents into their existing workflow. And no one knew it was possible before the show. So we knew that because we hadn't created the product. And now it's so exciting because we've onboarded tens of thousands of customers and we've convinced them you don't need to DIY your AI. You can just use, and you're going to get the best AI, the highest accuracy, the lowest hallucination rate. Our customers are saying in many cases it's 2x the accuracy of the best models.
So 2 things there. Number 1, referring it to as Clippy is like crazy, bro. Referring to it as Clippy is actually wild. But he didn't do that. Bitcoin right here dropping right now. Second of all, I'm not convinced Agent Force or whatever is going to be this hyper scaling growth vector for Salesforce. And let me know in the chat if you think that is the case as well, because I'm not fully convinced on that. Amit, have you heard of Oklo? Yes, this is the Sam Altman nuclear fission company. Actually, one of my friends who I met at AFPCon, he was invested in this one since like 2018 privately. This is an interesting one. It's important for energy, but it's kind of one of those startups that's public, similar to Archer Aviation, like less than $1 billion market cap. If you buy it, you really got to believe that nuclear fission is going to be this massive growth wave when it comes to supplying energy. Sam Altman pretty much like invested in this company because he knew AI would need a ton of nuclear energy. So I like this. Don't have a position in it, but it could be a wonky stock for a while on the public markets because, again, it's like a startup that went public. But again, when it comes to Salesforce, I think Marc Benioff is talking a lot of smack around copilots, and he's trying to compete with copilots. I don't fully know. And let me know in the chat. I mean, for the people that use Salesforce at their job, if you get a chance to implement the agents inside of your CRM to like become quote unquote more productive or efficient or whatever, let us know if it's actually the thing that is transforming Salesforce, because they're growing at 8%. They don't have the hype that Palantir has. The market cap is at $254 billion. It's one of those things where it's like Marc Benioff is really trying to build that hype and convince the world that they have an AI narrative and a tailwind. I don't know if that's fully the case yet. And so I guess in the next coming weeks, or at least months in the next quarters, we'll see if the numbers can reflect that as well. All right, here we go. Friday, 2 days after the Fed cut rates by 50 basis points. We're going to end out the week, 9:30 a.m. Thank you, everybody, for being here. The stock market is now open. Wake your ass up on a Friday morning. S&P 500. Here we go. 568 on the day, down about 21 bips. Today is also Witching Day. We had one of these the other day in the stock market. So the Witching Day is every third Friday in March, June, September, and December are Witching Days. This is the simultaneous expiration of futures and options on indices and stocks. And this is like known as a quadruple witching hour because of the expiration of contracts has historically affected the price of underlying assets. So we might see a little bit of volatility here today as well, simply because it's one of those witching days, and we'll see what happens there. Rocket Lab starts off the day pretty much flat. Salesforce up about 1%. So it looks like Benioff talking some smack about Microsoft is working. Meta down a little bit. Robinhood 22.92 up about 1% or up about 0.5% right now. Palantir, we got a nice green candle right there from the pre-market. So there you go. It's still going up. 36.27. Again, Karp sold about 9 million shares over the past couple of days. The market so far is saying they do not care. The rebounds does happen today. And I think on Monday, Palantir will officially be in the S&P 500. So if you own the S&P 500, you will own a small piece of Palantir. But if the stock really doesn't get affected by the fact that Karp sold $325 million worth of stock, then I guess the liquidity is there and market really doesn't care too much. Palantir right here, 36.20. Amazon 190. Nice to see. Amazon's now at 190. Shopify 78.74. We got Bitcoin here trying to get back to 63,000, right at 62,920. Carnival Cruise at 1880. Apple at 230. Wow, Apple at 230. Max 7's pretty much green right now. Yeah, look at that. Apple at 230. Microsoft's green. Microsoft's red, so slightly red. Meta's green. Google's green. Meta's at an all-time high, or yesterday was close to an all-time high at 565. Amazon 190. Nvidia 117. That's red. And then Tesla. We didn't even talk about Tesla, but yesterday Tesla had a great day. By the way, I'll be on Farzad's channel today at 2 p.m. Eastern to talk Palantir. So I'll be there. Haley, another Palantir YouTuber, will be joining me. So we'll be talking Palantir on that channel. But Tesla right here, 243, pretty incredible. If it just holds 240, that would be amazing. It was up 7%. There was this tweet that went viral yesterday of some dude who like put out this long post about him selling Tesla when it was on like the 210s, like 2 weeks ago. And yeah, it was going viral because like now Tesla's at 240. So it is what it is. But Tesla getting a real ramp up from the rate cuts and the market saying, hey, we like Tesla if rates are lower. Apple right here at 230 is the surprising one. Apple at 230 is wild. I mean, Apple at 230. Market's saying, hey, oh, by the way, the iPhone comes out today. Let me know if anyone's buying it as well. Market's basically saying, hey, they are ready to buy the iPhone, I guess. CrowdStrike, what do we have on CrowdStrike? Wow, CrowdStrike. Holy crap, 290. Look at that. Nice 5% gain on the crowd. It makes sense. Let me just read a quick thing that we had JP Morgan say on CrowdStrike. Let me know in the chat also if you own CrowdStrike. It took a little bit of balls to buy that dip, but if you did it, then not too bad. So on CrowdStrike, we have Goldman. They said, we attended CrowdStrike's Falcon call. We did not hear any data points around churn or downsell. CrowdStrike detailed the success it is having on Falcon Flex, driving a 65% ARR uplift on average. We believe CrowdStrike has the building blocks to be a much larger company over time, a strong organic R&D notion, a targeted M&A strategy, yada, 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 yada. They keep going further and saying, hey, the stock could be volatile in the short term, but we think it's a good buy. Price target to $324. So there you go. Cybersecurity in demand. Salesforce as well. Wow, 270 on Salesforce. Now Salesforce for the year, CRM for the year is up 5%. At the beginning of the year, or at the top, it was at 316 in March. And at the beginning of the year, it was basically around 270. So it's getting back to where it was. Remember, it fell to 212 after that horrendous quarter in May. And now it's recovering. It looks like talking about Microsoft and calling their copilots the new Clippy is doing good for investors. So there you go. Salesforce is up right now. Sled says, yes, I bought CrowdStrike when it dropped to 200 and kept DCAing. Congrats. There was a lot of FUD on Twitter, dude, about CrowdStrike. A lot of people just felt like, I mean, there were people saying it's going to 150, it's going to 100, it's over. And like, I don't think you could blame them based on the event that happened. But when you actually listen to the earnings call, like just listen to the earnings call, you could tell like, no, this is not like, they're too important. Their customers aren't leaving them. They're just too important. Maybe there's still going to be some lawsuit I don't know about that's going to like take them under. But every equity analyst putting out a new upgrade saying, hey, like, we're good. Like, just buy it. we don't need to worry about this anymore, especially because they want to buy CrowdStrike because they know how important cybersecurity is, but they just need to mitigate against like the risks of getting sued. It seems like those risks are minimal, but it could still happen. Palantir at 3630, down 1.4%. Robinhood 2282. S&P holding 568 right now. 567.9, which is not bad. I would love a close above 565. Remember, 565 was that all-time high that we touched 3 times, and on the 3rd time, we were able to surpass it. So I would really love today closing into that 570 or at least 568 range, and hopefully make the next leg up going into October. Amit, did you hear about Google Waymo's and Hyundai's Ioniq 5 partnership? I did not hear about that. I imagine that is some news that we have today. You know, it's funny. Whenever Waymo has good news, it doesn't really affect Google stock too much. Like, it's not like the market gives Google too big of a boost on that, because I don't think they believe. I mean, I think most people forget that Google owns Waymo, but Waymo is the one that's, working the hardest right now when it comes to self-driving until Tesla releases it. Google right here up just 0.5% on the day at 163. Broadcom's up a little bit, 168. HIMS 1677. Zillow is up today. Let's look at our interest rate plays. So from the interest rate side, yeah, we got a decent amount of red today, but a lot of it is red just based on the fact that yesterday everything was up so much, so it's kind of expected. IWM right here down about 0.5% with small caps. SoFi at 809. SoFi is getting very interesting to me. I'm wondering if SoFi is going to just break out into the teens like a lot of other stocks have after forming this 3-year base at this point at $8. And I want to say they're going to do it because, again, so my perspective on SoFi has always been, I don't like the execution on the technology side. I've never been a fan of that. I've made that very obvious. But I've also always felt, hey, it's a fast-growing company, even if the banking part is the fastest growing. And it's been demolished for the past 3 years, that eventually, once the shorts give up shorting it, because that's another reason it's down so much, that's 18% short, you should see some natural momentum to the upside, and the tune should change, even if I don't think their technology is all that impressive. And so I just wonder, like at $8, are we looking at this a year from now and it's 15 and we kind of feel stupid thinking, hey man, at $8, it was like kind of a no brainer, at least to take a bit of a gamble on, because for a company that you would be taking quote unquote a gamble on, I mean, it has amazing leadership with Anthony Noto, and it doesn't seem like a company that should be stuck here for so long, especially if the shorts give up. So I don't know. The problem is it can't hold its gains, right? Like that's the biggest issue. It's in the $8 range, but even after 50 bips, it's still not holding the momentum. And maybe it's because the street's just not convinced. They need more guidance from SoFi. They need to show that EPS growth is happening. And they're just not going to give it the premium until they believe that it's actually happening. MicroStrategy down about 1%. Carvana down 1.3. Lululemon down about 2.7. Elf is down a little bit. Where's Nike on the day? Nike's up 7%. So not up the 10% it was after hours, but it still is up 7% on the day. Again, the Nike CEO did get booted. And kind of embarrassing to get booted and your stock to go up, but that's what happens in corporate America. It happened with Starbucks. Where's Starbucks right now? Starbucks 96.54. Again, the Starbucks shorts have not worked out. If you shorted at 92.93 when it ran up from $70, shorts have not worked out. The CEO or the street is convinced that the Chipotle CEO is going to turn this around, and we'll see if that happens with Nike. Now, the new Nike CEO is named Elliot Hill. He's not like some outsider. He was in the company in 2020, and he led like the direct marketplace consumer stuff for Nike. I don't know how impressive that is as a new CEO. It's just the same guy who did some stuff in the past. But I guess the market is so excited that he's, that there's some CEO transition, which is why they're giving them the premium here right now. CrowdStrike went like 30 to 35% within 1.5 months. Yeah. CrowdStrike should have never been down to like the 200s, but August 5th happened and then July 19th happened, and it created the perfect storm. And that's what I love about the stock market. It's like, if you really spend the time to look into a company, you can see the misallocation of capital and the asymmetric risk that could exist. I mean, I also, Derek, good friend of the channel, he bought a lot of options on CrowdStrike. I think his strike was like $220 for December 2026. And he bought those when it was tanking around that August 5th time. So I imagine he's up a lot of money on CrowdStrike, and he knows CrowdStrike from the early days when George Kurtz was just getting it started. So, I mean, he knew this was an A-class company that made a mistake, but it didn't deserve to, collapse or get delisted or anything. So those asymmetric opportunities, they exist sometimes. And it's just a question of being able to do enough due diligence to find it. Amazon right here at 190, QQQ at 482, Tesla at 240, Nvidia at 117. Apple at 230. PayPal also, congrats to everyone holding PayPal, 76.98, down a little bit on the day, but touched 78 yesterday. It's been a long hold for PayPal, and PayPal deserves some of that momentum as well. What else do we have? Bought a little bit more of PayPal. Where's Palantir right now? Is Palantir still at 36? Palantir at 36.40. Yeah, down about 1.25% on the day. Google right here, 162. All right, let's get a Nike update. And wait, let's take a look at FedEx. Is FedEx getting hit? Oh my God, FedEx down 13%. Holy crap. So the problem with FedEx, two things happened with FedEx. Eli Lilly's up right now because they lowered the price of Ozempic by 50%. Them and Novo Nordisk came out with some plan today about lowering their drug prices, so that's what's helping them. But FedEx yesterday on the earnings said we are seeing lower demand in our domestic U.S. shipping business, aka people are buying less stuff and people are sending less stuff. Now, I read a couple analyst reports saying that's a FedEx thing. It's not really a consumer thing. And the jury's still out on this, but UPS down about 3% on this news. And then you got FedEx right here at 13%. There is an argument by a decent amount of people saying Amazon is really taking their lunch here. Someone commented on the stream yesterday, and I thought this was really important. They said, anecdotally speaking, Amazon used a lot of FedEx for delivery in South Florida, but now that Amazon has their own delivery trucks and continues to expand, this person, I'm assuming, lives in South Florida, fewer and fewer FedEx trucks are being used. To confirm this, you want to see Amazon meet or beat expectations, and then UPS and Shopify to meet, or at least the top or the bottom line. I think this is very correct. If Shopify and UPS and Amazon can have an amazing Q3, then this is a FedEx issue. This isn't a global consumer demand issue when it comes to e-commerce. But we're going to need those three companies to kind of hit it out of the park. Where's Shopify right now? Yeah, Shopify's down on this as well. So if Shopify, UPS, and Amazon can kind of show that their results are fine, then it's not about consumers shopping less. And by the way, the Shopify president at the Goldman conference 2 weeks ago said that the consumer is fine. So I wouldn't imagine the FedEx results are indicative of the Shopify results unless, they weren't being as accurate as they were at the Goldman conference. But we're going to need some updates to see, if this is a FedEx thing or if this is something else as well. FedEx is connected with Walgreens too. Really? What's the reason for that? Does Walgreens use a ton of FedEx? Because that could also be an explanation if Walgreens is one of their major clients, why FedEx is also seeing some weakness here as well. Okay, let's get the Nike update. Let's see what some people have to say around Nike and if we can revitalize this brand. Let's take a listen in on the CEO replacement and ultimately if that's going to be bullish or not. I can drop off my FedEx packages at Walgreens. So they kind of have a Kohl's Amazon type of thing going on. All right. Well, if people aren't going to Walgreens anymore, that could be an argument as well why FedEx is taking a little bit of a demand hit. All right, here we go. Here's an update on Nike.
Who is stepping down, and company veteran Elliott Hill is coming out of retirement to take over as CEO next month. Joining us right now with more on what this means for the future of Nike is Adrian Ye, who is Barclays U.S. Retail Senior Analyst. And Adrian, this is a big move. The stock is reflecting that. It's up 6.5% this morning. What needs to be done, and what can he do in quick order?
So I think the big piece of it is that just fundamentally, he's a product and marketplace person. And so from the prior management, who had been sort of more of a consulting background and more of a technology background, retail really does need that person who understands product and brand and consumer. So in short order, I think it's just the direction of where he's going to take the company over the next 6 to 9 months. What's already in the pipeline is coming at us, right? So that innovation, and we're starting to see that in early 2025.
Yeah, the stuff that's already in the pipeline, okay, that's not going to be things that he can get his hands on and feel around it. We've gotten reports of excitement at the company headquarters, people looking forward to these changes because they know him and know him well. My guess would be there would be outside partnerships that would be pretty important too, Foot Locker and other places too. How quickly can they rebuild some of those partnerships and connections?
So from the wholesale channel management, you can start to do that almost immediately. And we already had heard from the company over the past quarter that they were moving away from this DTC strategy, sort of back to the wholesale channel.
Right.
Direct to consumer, exactly, direct to consumer. Right. And so that shift back to the wholesalers, the Dick's Sporting Goods, the Foot Lockers, that had been sort of abandoned for a period of time in favor of their own direct to consumer business. They already had started to move back to that, because he has, a 30-year veteran of the business, and one of his charges was marketplace. So marketplace is this wholesale retail partnerships that can immediately start to feel some impact.
I don't know, man. I don't know. This is an interesting one. The FedEx right here down 15%. FedEx is getting absolutely demolished right here. Nike still up 7.5%. I'm not that convinced this Elliott Hill guy is going to change things. Like, what exactly is he going to do that's going to compete with Lululemon and Haka and all this other stuff that's popping up? I feel like the only way to compete there is either innovation on the product side or marketing. And unless this guy's a marketing savant, and by the way, doesn't Nike sponsor all the best athletes already? Like, how much more marketing can they do? Palantir right here down about 1.6%. I think the brand took a little bit of a hit during the Colin Kaepernick stuff and, people assuming they went a little bit too woke and all that. And like, you could argue that has some impact on it. But besides that, they are still Serena Williams, LeBron James, all the big people in sports. Caitlin Clark, I think, has a Nike sponsorship in the WNBA. Like, all these people are they're endorsing Nike. So like, what they're going to go to TikTok influencers or something to increase sales? It feels like the brand itself is not getting the type of momentum that it had years ago. And I don't know how Elliott Hill changes that, especially if he's inside the company. I mean, if you're a company vet, then all you're doing is like, I don't think you have a fresh perspective per se is what I'm trying to say, given you've been inside the company for so long. Rocket Lab right here up 5%. Look at that. Rocket Lab is pumping. Did they have a launch yesterday? They had a launch yesterday, right? Or like 2 days ago? Was the launch good? Was it successful? I feel like, Rocket Lab did get a $15 million contract today. They got a $15 million contract for the Space Technology Advanced Research Effort. This contract provides funding for space solar power advancement for Constellation class expansion. Maybe that's why they're up. They got a $15 million contract today. But it's rescheduled for today. They had to reschedule it. Okay. Where is that launch happening? Is it in a different country, or is it in the United States? Launch today. What time is the launch happening? I'm assuming Matt Money will be streaming it, probably. New Zealand? It's happening in New Zealand? Okay, interesting. All right, so maybe that's why Rocket Lab's up right here. Up 5%. CrowdStrike, wow, 292. CrowdStrike goes back to 300. That'll be funny. Robinhood right here, 2270. S&P 567. McDonald's, 293. Ulta at 402. Elf at 114. Rick, our boy Rick, is down 2.27% today, but it's up from the beginning of the week. And then we got Zillow right here that's down. Intel as well getting a little hit. Enphase 116, they're getting hit as well. They were up during the week because of the rate cuts. And then Oracle, slightly green. Kind of a boring day. Nothing too crazy. Even Palantir, you would expect some more volatility based on this whole Karp selling, people getting upset, but down 2%. Market doesn't care that much about that either. Tesla dipping a little bit under 240. Look, I would imagine today's Friday. People are going to take some profits. That's fair. Tesla right here at 239, especially after a good week that we've had, but not too indicative of anything else other than people taking some profits. What else do we have going on? Okay, so Bank of America on the Fed cut, they said this was the most demanded Fed cut since the early 1980s, given how far front treasury yields have fallen. This feels like a Fed that craves to be on the right side of the market. It doesn't get much better than that for risk, so investors are still forced to chase. Still, the bubble risks are returning, and they recommend buying the dips in bond and gold. Interesting. Gold, by the way, is having a great week as well. Gold right here, up again. I think these are all-time highs on gold. Got gold right here, GLD at 240. The 10-year, is it up or down? It's been up all week. 10-year is up again. And then the 2-year, I believe, is up as well. So on the rate cut, you would expect people to not have yields go that high, meaning you would expect them to buy the yields, and that's not happening, which would cause the price to go lower. They're selling off these yields, which is why the yields are going higher. It's a bit understandable in terms of how the market's kind of perceiving where real rates will be. Is it going to have some massive impact because rates are not going down, even though the Fed cut, like yields are not going down, even though the Fed cut rates? I don't think so. I don't think that's like a sign of anything that's super, super worrying per se. It is a little bit unorthodox from what historically happens. This is also something Meet Kevin was pointing out. He was saying this is a super, super bearish thing that the 10-year is not going down. I would argue that it's definitely unorthodox. I don't know if it's like super, super bearish. At the end of the day, if Q3 earnings are good, stocks will go higher. It is going to be a question of if Q3 earnings are good, which means is the business environment conducive enough for other companies to have good earnings into Q4? That's where the rate cuts come in. And then most importantly, the most important thing, forget the 2-year, the 10-year, the bond yields. Do people have jobs? And do people have enough money from those jobs to spend at companies so that companies can put up good earnings? If that thesis is not broken yet, then I think everything else is a little bit more noise because, markets are going to react positively to that stuff as long as unemployment is not hurt. So I think that's going to be the most important thing to see over the next few weeks as well, going into the election as well. No stress says Q3 earnings and guidance is important, and if the job market stays healthy. Yeah, I mean, look, that's the most important thing to think about, whether the 10-year, the 2-year reacts in a certain way. And look, it's not that those aren't important. It's not that a reinversion or an uninversion isn't important. But at the end of the day, the market's just not going to buy Google unless Google's putting up good numbers. Google can only put up good numbers if people are advertising. People are only going to be advertising if people are clicking on ads. And the reason you click on an ad is because you're interested to buy something. And you need to have consumer sentiment say, hey, we still are ready to buy. Remember the retail sales data we got last week, or we got it on Monday? That was shocking. I mean, that completely surprised estimates. And then the initial jobless claims we got yesterday, which also helped the market go up, that was at a 4-week low. I mean, you got a lot of good pieces of macro data coming in showing that people have jobs and the consumer is okay. I think the jury's still out on if the consumer is really okay. But putting those pieces together, it doesn't seem like they're in an absolute horrible position right All right. What else do we have? Doug says don't fight the Fed. That's another good point. Usually it's not too good to fight the Fed. Profit taking Friday. Yes, most likely profit taking Friday. Do we have any other headlines? Oh, a couple charts. Let me show you guys a couple charts. Then we'll have TJ come on in about 5 minutes and we will take a look at the public portfolio and see what moves we need to make in the options market. So iPhone 16 demand, Chris posted this today in India. He's saying something we should keep an eye on in regards to the monthly market share of iPhone across India from January 2021. It's going up. It's at about 4%. That is double where it was in January 2021. Given I've been to India a couple times and I'll be going there again in less than 2 weeks. iPhones are not available in mass in India. I mean, every single person you see has some version of an Android. The only people that have iPhones are really upper middle class. Most people have an Android. So the fact that India is even getting a double percentage point increase over 2 years with the iPhone, it does show that at least India is starting to be maybe a growth vector for Apple that we haven't thought about before. But the problem is that iPhone 16, no one's paying, $1,500 in India to buy that stuff. Like you need an iPhone that costs like the equivalent of probably $250 and even that's pushing it because in India you can get a phone for less than that. You can get a phone for like $50 in India because there's just so many. So, and again, there's so many people that like can't afford that stuff. So we're going to need to see a little bit less pricing on that in order for that to increase broader market share. And then if we look at small caps right here, here's a good chart by Bank of America. So historically, small caps have outperformed large caps in the first 6 months following the first Fed rate cut, but underperformed in the initial months. Over a 12-month period, performance has been mixed with positive average returns, but an outperformance rate of just over 50%. So for those betting on small caps or TNA, I think history is on your side here. The question is just going to be avoiding a recession because obviously small caps are much more prone to getting hit hard if there's a recession in order for that small cap rally to really take off. All right. There you go. Let's get on. TJ, bring him on to the show. We weren't able to do the show for the past couple of weeks because I was traveling, but we're back in action. Got some portfolio updates, and we got a lot of moves to make and discuss to go further. TJ.
What's up?
I like the hat. I like the clover on the hat. I like it. That's nice.
Yeah, I picked it up in Vegas. It says good vibes or lucky you or some shit like that.
I was about to say, yeah, you went to Vegas.
I see that who's the motivational guy, Robbins, something like that.
Tony Robbins.
Dude, he's always wearing this thing. Is this his company or what? Or is he just promoted?
I don't know, to be honest. I'm not sure.
I feel like I've seen a lot of little clips of videos and he's got the little 4-leaf clover thing going. And I was like, well, I mean, if it works for him, it'll work for me.
Put in the chat if you so I had a phase where I listened to motivational speakers from 2017 to 2019. I was deep in it, dude. I was listening. Put in the chat if you had that phase in your life where you get the self-help books, you read, listen to the audio tapes, all that stuff. Yes. And then you realize, oh, this is bullshit. I have to actually go put in the work to make anything happen. Let me know in the chat if you had that.
Yeah, you can't motivate yourself into being a millionaire, guys. you're gonna have to do a little work along the way or scratch a lottery ticket.
Dude, it's toxic. It's toxic because like you get into, and it's good for people who've never been introduced to like self-development. But once you're in it, it's the same shit regurgitated over and over, and you realize, oh, I need to actually be like working, not like listening to this stuff.
Yeah. No, agreed. Well, let's let me see if I can get it together here. Let's present and see where we're at. Where do y'all think we're at?
We know where your portfolios are. We know where your portfolios are.
No, but I'm talking about our project here. Where do you think we're at? Because we were like at 250 or something the other day, right?
Oh, and premiums collected?
Yeah.
I would say we're at like I would say 260 maybe, around that range. 250.
And then how do you think we're doing on capital appreciation versus depreciation? Because that gives you the bottom line, right?
I don't know. To be honest, I'm not sure. I would imagine it's been better since September's been okay for the market.
Yeah, let's look. I just did it right now. So we're at 324.
Wow. That's
324, not too bad. And it's been collected premiums 264. The total open collateral is probably not accurate because I'm adding 733,000 that I have on TSLL.
Okay.
But we're also beneficiaries of the $101,000 in premium that we've collected with it. So it stands to reason that I have to put it over here as well because there's a lot of puts for January. But then there's a couple of things that I was messing with, and I'm not sure if they're commingled. So this might be off by like 100 grand, give or take.
Wait, so I have a question here. So this premiums plus gains loss on shares. So that 324 is the 264 plus the amount we're up on the actual shares we own. Basically.
On these shares right here, on Hood, on TSLL, on NVIDIA, on BITX, American Airlines, and CrowdStrike.
Got it.
That's how that cookie crumbles.
Yeah, it's not too bad, man.
And then
we've been doing this for 8 months now. It's not horrible.
Yeah, Hood's been responsible for 39K. Shop was 7,400. I feel like we might have played that one wrong a little bit. I feel like that one could have a $25,000 handle on that one.
Yeah.
But, we live and learn, right? It's just, we don't know. We don't have a crystal ball at the end of the day. So we just make our best guesses. TSL has been responsible for a chunk. HIMS did okay. That was that one earnings play on NVDO back in the day, and then lost money on Path, thinking that I could buy the dip successfully. Did not work. NVDA is NVIDIA. Snow, we're still in a put on Snow. And then BITX has collected a crap load of premiums, and that plays, picture perfect right now. Meta was good for 12.9. American Airlines, we're still in it, good for 12.8. CrowdStrike's good for 7,700 in premiums, plus capital appreciation. CleanSpark's good for 19,000. I did some puts.
Yeah, you told me about that. You did puts on that.
Yeah, I did 750 puts in the distance. So we'll talk about that. So how do you feel so far? I mean, that's it's kind of crazy, right? If you think about it.
That feels great, but I'm also liking this number I'm looking at with a 7 in front of it on the public portfolio. It's been a good week for you, I would imagine.
Yeah, well, the thing is whenever you own a bunch of shares, they don't have talked about it a lot. When you own a bunch of shares, 150,000, 23,000, 10,000, it just
becomes a game, right? Every dollar it goes up a lot.
Oh, yeah, imagine what it's like for Warren Buffett, who owns millions of shares. You know what I'm saying? So that's why I don't. Oh my God, I made $600,000 today, or I saw a screenshot of a real big Twitter account yesterday. The dude was up like 300 or 400. Congratulations. But you're just, you could be down that amount tomorrow. You know what I'm saying? Like, this is just, in other words, it's just to feel good. It's the barometer, right? It's
that's also what I like about you. When SoFi was at like 680 or whatever, people were giving you shit and you're like, guys, I'm a shitty investor today. So if I goes to 740 tomorrow, I'm an amazing investor, So it's like, it's so emotional based on the day to day.
That's the reality. So which one do you want to start with? Do you want to give people like a refresher on what we're doing here? Because some people might be tuning in for the first time, perhaps.
Yeah. So for all the people that are new to the channel, welcome to the channel. Every Friday I do a segment with TJ. TJ has been teaching me personally, but also sharing with the rest of the world how to wheel options. Wheeling options is selling cash secured puts on a stock. We'll talk about what that means in a second. And then selling covered calls. And so we've allocated about $1 million to the public portfolio out of his 7 million, where he and I on Friday, we pick stocks and we try to wheel them. Some of them we get wrong, some of them we get right. And so far over the past 8 months, we've collected about 300 grand in total appreciation. Let's start off with what we're doing with Robinhood. I want to explore that.
Sure.
And then we'll get into some of the other things we have.
So I'll start here. We'll just go through the entire position real quickly. And we're actually in a pretty good spot here, Amit. So I had to make one move without your permission because you were doing the whole Palantir thing. So we have 22.67 as the current share price. It's 19.72 average cost. So that part's good. We bought these shares live, so y'all can rewind the tape 2 or 3 episodes ago. That happened. And then we have covered calls for 23. These covered calls were actually for 22, but I rolled them out and up a week because I didn't think that you were going to want to sell those shares at 22. So
I like that move too. I like that move.
Yeah, we wouldn't own these shares anymore, but I was like, I don't really see if Amit's so bullish on Hood that you're not going to want to stay in it a little bit longer. So I took it upon myself to roll those. And
real quick, so the covered call, for those that are new to that, we are agreeing in a covered call to sell our shares at a certain price. So you need 100 shares per contract to sell one covered call. The market pays you a premium. That's this game that we're playing. We're trying to get premiums from the market to sell that covered call. We got an average price. TJ, why don't you explain it? You can.
Yeah. So essentially we entered into a covered call on those shares of Hood, right? Because I was like, hey, I think it's a good idea to sell covered calls on it. And you were a little like not really wanting to do it. But
and then you told me the squatters, they're squatting. They're not doing anything.
Well, my whole thing is we can always roll. So let's put, just in case there's downward action, we're going to get some free money that we otherwise wouldn't get. A, B, it lowers our adjusted cost basis, and it allows us to continue to sell covered calls on a downturn. Whereas if you choose not to sell covered calls and it goes down, now you're bag holding until it rebounds, unless you have more money to like double down and whatnot, or you're willing to be risky and sell below your cost basis, which it really isn't recommended.
Well,
So,
what is a covered call for those that literally don't know?
so when you own 100 shares, you essentially say, hey, I'm willing to sell these shares on X day for a certain price, and they're going to pay you a premium for that. So you put your house up for sale, but in the interim, they're going to give you the options money to put it on the market at, you know, on that day at that price. Like if you want to compare it to real estate. So if you have 100 shares of a stock, you can essentially collect premium week after week, month after month, theoretically, as long as the share price doesn't breach your strike price. Now, if that happens, you have two options. One is do nothing, let the shares get called away. Two is restructure the terms of the contract. Basically say, hey, you caught me over here. I'm going to lose money over here, but I'm going to reposition myself over here so that overall, collectively, I position myself to make a lot more money.
Right.
And it works out. So we sold the covered calls over here on August the 22nd, the 23rd for $22. We brought in $2,100 in premium. But then we sold puts at $18.50. We brought in that $12.50, and then we sold those puts in the distance that are still on the book. And then we recently closed these out.
Yeah.
Remember, we sold those $18 puts for January, and we said, hey, if this thing goes against us, we'll go heavier, because you wanted to do 100 contracts. I wussed out and we only did 50.
Yeah.
And I was like, let's scale into it, because, you know, I'm a little wishy-washy, to be honest with you.
Yeah.
And then we ended up buying back these right here. You'll see these 25 contracts. We ended up buying these out for 13 cents. So we collected 50 cents and we closed it out for 13 cents, and we freed up all that capital, $1,850 times 25. And then I rolled those covered calls, because just like you said, it wasn't a good idea to sell covered calls. You ended up totally being right. But I was like, well, I can kind of write this wrong and collect another $1,350. So you add that to the $2,100 that we collected on the front end, plus the $1,350 on the roll, and we went from a 22 strike to a 23 strike. I'm feeling pretty good about it. And then on top of that, Amit, I looked up one day and I was like, hey, yo, we're at 50% on these cash secure puts in the distance, and there's still over 100 days left on the contract. What do you want to do? And you're like, I think it makes sense to close via text.
Yeah, if we're up 50% in less than a couple weeks, I mean, literally, we
Yeah,
sold that.
we did these on 9/6, on 9/6, guys. And
So let me explain the role. This was good. So someone says, when doing a covered call, you're betting the stock will go down. So technically, you are betting the stock will not go above that price. So when TJ and I sold those covered calls at 22, I think Robin was 19 or 19.50, and TJ said, hey, these 5,000 shares are doing nothing for us. We need to treat them as tenants inside of a house. And when we sell the covered call at 22, someone's buying that call for September, whatever that we sold it for, to bet that Robinhood will get to 22. We are selling that call to them. They're paying us rent. They're paying us a premium for us to sell them that call. The benefit of this strategy is if Robinhood does not go above 22, we keep the premium and we keep our shares. So we get to keep the 5,000 shares and keep all the premium we collected. If Robinhood does go above 22, which if you look at its stock right now, it's above 22, we are contractually obligated to sell those 5,000 shares at the strike price, which is 22. The person who bought that call gets those shares. If the stock's at 30, for example, we missed out on $7 or $8 of capital appreciation that we could have had. So what TJ did is say, okay, we got the 22. Let's roll the contract to 23. So we get paid another premium to close the $22 call, open a $23 covered call. And now we just hope Robinhood stays below 23 to keep our shares. If it runs away to 27, then our shares get sold away, and it is what it is.
So to just follow that real estate analogy that I started with, the way that it was explained to me is you put your house on the market at a certain price on a certain day. And if you want to roll, because now the market conditions change and you're like, yeah, I could actually make more money for agreeing to sell my house down the road because rates came down, whatever the case may be, right? There's an inventory issue, something that's favorable for you. Because now you have more information that you didn't have when you entered into the initial contract. You're simply just agreeing to pay a fee to take your house back off the market, to reposition yourself back into the market at a later day at a different price, so that collectively you make more money, or position yourself to make more money. It's not a guarantee that it's going to work out that way. You might actually just be compounding your losses and prolonging the inevitable.
Yeah.
Just to put the other side of the coin out there, because that's the reality of it, right?
Right.
But on a covered call, if you're able to roll out and up and the stock continues to shoot up every time that you successfully take your house off the market and put it back on at a higher strike price, and it continues to get breached, then at the end of the day, you're just deciding how much more money you want to get before you finally sell the house.
Correct. And for the people saying this is way too much drama to deal with, especially if you have to roll and all this covered call stuff, why don't you just let the shares appreciate? That's a great argument. And with Robinhood, it's happening. With Palantir, it's happening. With NVIDIA, it's happening. But for the majority of stocks, they're not just going to go up and up and up and up and up. They're just going to kind of stay flat. They'll have some moments of bursts, and then they'll kind of stay flat. And over the years, they'll go up, but not over the weeks like Robinhood, Palantir, and NVIDIA are doing. And so for the majority of stocks, those covered calls can bring in cash flow, even if the stock is doing nothing.
Right. But the thing is it's a lot because you have a lack of understanding. I can look at a position and roll it, and it literally takes about 30 to 45 seconds of my time. And then now I'm qualified for more capital appreciation, and I move on to the next one. Now I don't have to deal with this today. I deal with it in 2, 3, 4 months, whatever the case may be, 2 weeks, depending, right? Like I've got a situation where I'll show with Riot. It expires today. I'm either going to decide to take ownership of the shares, or I'll kick the can down the road a week or two, a month. Y'all will see that it's going to take less than a minute. But it's because I have a clear understanding of what I'm into, right? So it's your lack of understanding that makes it feel like, oh man, this isn't worth the trouble or worth the hassle for me. But I've already put in those thousands of hours to learn, the ins and outs of what I do for a living. But keeping it in mind, keeping it going.
Let me do this comment, and then we'll get to the next one. Beacon says, what is the con of doing this weekly and saying I'm fine if I make a gain X this week and losing my shares, and then just continuously rebuying the dip? Yeah, there's no con other than what you said, the short-term taxes. You can do this weekly. The stock can go up. You can lose your shares. Stock can come down. You can rebuy them, sell more covered calls. I mean, this is what TJ does for a living. Right?
The big con, though, if you want to put that up there, there's a big con to that. If I decide to just wheel it, because what he's talking about is wheeling it, like, hey, this is static return. I've already agreed on the front end. I don't even have to look at it. It's going to pay out how it's going to pay out. Well, now I'm going to have all of this money because the shares got called away. And now I got to go do a bunch of work potentially on a different ticker to see whether or not the setup makes sense to reposition and redeploy my money. Whereas if here, I'm already comfortable. I know what's going on. The market's giving me even more information. Dude, it's easier just to stay here, right? The shares up another $1 or $2. That's the easiest money in the market for me right now.
Right. Right.
So getting out of the contracts completely, then no shit. Now I'm at square one with something else. Well, and now I still have to monitor this one and hope that if they come back, or I'm going to reposition and re-enter via cash secured put, it's easier to play the stock from behind for me via covered calls and keep rolling and rolling and rolling those, because I know what I'm going to do with that part of the portfolio with Palantir for the next 3 to 5 years, probably.
Right.
Because the stock's gone parabolic, but Karp keeps selling, the amount of shares that he's selling, people aren't going to understand. That shit can come down to 25 real quick. Right?
Oh man, if it comes to 25, the amount of people that'd be ready to buy that dip too.
Didn't he own like 60 million shares, bro, or something like that? And he sells 10, good for him, bro. He wants to be a billionaire 2 times over. I'm just, you got to keep this shit into context a little bit. You know what I mean? Like,
yeah.
And he rocked a long time without making big money, right? Before they were.
He went 20 years having no income. I mean, not no income, but you know what I mean? Like he's
maybe he needed a perm, bro. Maybe he needed to pay his hairstylist. I don't know.
All right. So what are we?
Anyway, we did 93.50, and then we closed it out over here for 4,700. So we locked in a win there, and we took all of that money off the table as well for January.
So we have a red day. Do we think? I mean, it's not a big red day. Maybe we stay kaput on Hood, or are you thinking of?
I did. I mean, I like it. That kid option selling with Chris. He sold 20 puts at 21.50 for next Friday, and I commented on there and I tagged it. And I was like, maybe we'll be following you into something similar tomorrow if we have a red day.
Okay, so let's go to the options. Let's see.
Because right now we don't have anything aside from that covered call.
Yeah,
that's it. So, I mean, I don't mind looking at it. I mean, we're comfortable.
And it's down today. So you want to sell puts on the day the stock is down because the premium will be higher.
Yeah. So do you want to go a week out? Or you want to go 2 weeks? This is all based on what works for your lifestyle. Mathematically, you will make about 1 to 1.5% per year if you do weeklies, but it's more work because now you got to deal with this every week. Just like people have said in the chat, oh, that's too much shit. I got life going on. Me too. That's why I like 30 to 45 days out. because I have so many positions in other portfolios as well that I'm on top of. So I don't want to have, 20 expirations to deal with Friday after Friday after Friday, because I'm here for the dollars, not the drama. You know what I mean?
Yeah.
And it's just, there's so much that can go wrong on an expiration, because now you're dealing with potential gamma squeezes and everything else, because all of these Greeks have a job. They have to get that delta from either 1 to 0 to -1. And they have until the expiration day to get it done. So they're all like little worker bees, and they got a job to do. And like on that Palantir cash put, when we get to that, bro, it's shit or get off the pot day. You know what I'm saying? So it's, it has to happen for you. And it's either going to make you money or it didn't make you money. And I don't like those types of swings. They call that a tail risk.
Right. Let's do October 18th, because the event, their Hood Summit, is October 16th.
So we're here. So you want to go a month out? I like it. What are you thinking? $21?
I mean, that event should be good enough for them to be solid. I don't mind owning it at 21, and I think we could roll it, because the worst it goes to is 19 after that event if the market tanks 18, 19. So I don't hate rolling that. Yeah, I think 21's not crazy.
Okay. So we go sell put.
So we're at 59 cents. That means $59. 59 cents times 100 shares divided by 2,100 of collateral. 21 times 100 shares. That's a 2.8% return, 3% in 1 month. Which, again, there's not that many businesses where you can get 3%.
So here it gives you the context. You type 105,000, they pay you 3,000 up front. People are like, oh, that's not a lot. I'm like, dude, you're talking about 28 days. Here's the challenge for everybody who don't think the cash curve puts pay a lot of money. Go put $105,000 into your savings account and go back in 28 days and be like, I want my $105,000 plus the $3,000 in interest, and let me know how it goes with the security guard when you try to leave. Just saying, you got to keep it into context, because at your savings account, you'd probably have $105,060.
Also, it would be a scam, and everyone would call bullshit if we were picking up 20 grand off of 105 grand over 28 days, right? Like, so this is actually 3% already is aggressive. So, asking for 30, 40% in 28 days, that's just not possible. That doesn't happen,
Agreed. So I'd like to get a little bit more greedy, if you would, because I think we can probably get that extra penny. And let's do that. So now we got an extra $50 for our trouble. Hopefully we get it filled. Of course, now we got to wait now to go back. I do this crap all the time. Shit. We got it. So we filled at 50. So we picked up $3,050, dude. So not bad. And then the thing is all we did is we agreed to buy an asset at a price that made sense for us, and they paid us up front for doing so. So it's just real hard for me to find a huge downside selling cash secured puts on a stock that you're okay owning at a specified price. That's the big caveat there, is there's a lot of people that will sell cash secured puts only because they did the math and they're super excited about the math. They're not really taking into account everything else that goes with that math. Like, in other words, hey, are you really emotionally, mentally, financially, psychologically prepared to take ownership of $105,000 worth of Robinhood stock on or before whatever the expiration date was, 10/18, even if you can buy those shares on the open market, the same quantity of shares on the open market for, say, $90,000.
Right.
Because that is the agreement. Don't go cry to your mom. You agree to pay $105,000 because people just bought insurance. You're an insurance agency. They just paid you premiums, and now you got to make good if they go crash the car, right? That's what insurance is. You pay to Geico, Progressive, whoever it is, State Farm, Allstate, and they're cool taking your money. But when you crash your car, sometimes they give you shit, but eventually they have to make good. That's what selling puts and calls is, guys. You're the insurance agency. Don't be crying when they crash into the tree. You knew that it could happen. And then what sucks about it is you're the one driving the car, so you got nobody to blame but yourself. You know what I'm saying? You were the one drunk driving. I call it premium drunk. That's how I came up with the term, because I was doing this whole insurance analogy. And I was like, dude, I've gotten in trouble for being premium drunk a lot.
It's a good term. And ultimately, this is how I like scaling into a position. You know, this changed my life learning about this because unless you think the stock's going up 10, 20% tomorrow, building position takes time. And wouldn't you want to get paid on a stock where you've done the research? If Robinhood at 21 is not a good deal, that's on you. That's not on anyone else. But if you believe it's a good deal and you were going to buy it at that price anyway, getting paid to wait to potentially get the chance to buy it there, I mean, it's a great thing to be able to do. And you get a return on your capital in the meantime, and then decide if you want to ultimately exercise it.
Yeah, I think cash secured puts are a great way to scale into a position, guys. If you're unsure about the price action, like if you want to be in the company, that's one thing. That's part of the investment thesis and the research. But then the other thing is you have to decide what's a fair value to pay for these shares, because you don't want to be bag holding. It's just like you knew that you wanted to be in early on Palantir, right? And you thought it was a good deal at $25. You didn't know any better.
Yeah.
And then you went down this rabbit hole, and your channel has grown and morphed into what it's grown because of everything that you've learned along the way. Dude, when you were buying shares of Palantir, just to put it in context, guys, Amir didn't even know what the fucking market cap was.
I was like, 25? That's not $25. It's $25. Wasn't it? I was like, oh, 25 is worth 50 billion? I wouldn't pay 50 billion for this shit. I didn't know it was worth 50 billion.
So I call it a cash secured put is just a easy way of me saying in layman's terms, I'm going to get paid to now really go research the company to see if this is really where I want to like plant the flag, if you will. And I want to take ownership of these shares because everybody wants to be in the right stocks. My challenge to you is, well, why don't you try to get in at the right price too that makes sense for you? And I'm not saying get enamored with buying the bottom, but you can position yourself to get a little closer to the bottom via a cash secured put, because you're essentially saying, hey, I want to get paid to buy the dip. That's essentially what you're saying whenever you sell a cash secured put. So it is just a more conservative approach versus buying shares outright and being like, oh, I'm long and strong. I don't care what happens, Warren Buffett style. I'm never selling the stock and all this other bullshit that he doesn't even own anymore. The last time I checked, that fucker sold a lot of Bank of America recently. That does not equate to never sell the stock. Shut the fuck up. It's just people go through cycles, guys. Like you go through cycles. You don't look at a relationship. You don't look at life the same way today at 49 for me as I did when I was 19 and I knew everything. There's a lot of broke people here in the chat that know more about this than I do, bro. I used to be them. You know what I mean? I used to be them. And as you grow up, as you grow into the investing into the world and life and everything, you're like, holy shit, I don't really know that much.
Yeah.
So now let me formulate a strategy. And then now it's like, oh, now I can't just go after my next double all crazy. I want to make sure I don't lose this money. So now I have to take into account capital preservation, whereas 2 or 3 years ago, Amit, I wasn't even entering into the brain, dude. I was just like, go, go, go all day long. And now I'm like, okay, shit, maybe Amazon makes a lot more sense than Neo. You know, right. Like, I was doing stupid shit, bro. I like it. I think you did great here, Amit. Thank you so much for bringing this to our attention, especially not just on this deal, but you've been pitching this thing for how long? Like how long ago did you start doing the research on it?
And when it was $9, that's when, I did the research at 7 to 8, and then at 9, I was like publicly, all right, I like it. But I think it's the journey of the research, right? Which is what you're talking about. It's like the journey of the research, the journey of coming to the conclusion, and the journey of realizing you might be wrong. Like SoFi, right? If you had waited to buy your 150,000 shares when it went to 575 on August 5th, you'd be up a lot more.
How great would they be, right? Yeah.
It's all about admitting that you're not perfect. And I think selling options is a way to admit you're not perfect. Also, the final point on this is I love this concept because it's being the casino versus the gambler.
All right.
When you're buying the options, you're the one that's gambling on if the stock goes up or down. And it better go up or down in the right direction. When you're selling it, you kind of don't care. You really don't. And as long as it goes in the direction that you think it needs to be, which is either flat or up on a put, on a covered call, it stays flat or goes a little bit down, you're good to go. Worst case is you have to buy more shares that you like or sell shares and make a profit. If that's the worst case scenario, then it usually beats buying it.
Yeah, agreed. Well, let's keep it going, dude, because there's a lot to unpack here. Where else are we at?
Let's go to, so we did Robinhood. Let's go to CrowdStrike. We haven't looked at this one in a while.
Yeah, I would like to. I don't know what's going on with my little deal here. Hold on, I might be frozen, guys.
No worries. I'll read this comment. Austin says, at this level, I sell covered calls and diagnosis on about a quarter of my hood position weekly at the market. It's volatile, so premiums are high, and it's fixed to the market, so I feel confident I can roll out. Yeah, that's a perfect strategy. That's a perfect strategy. And then it's just a question of, keeping it within the price range you want it to be in to either get out of that covered call or to let your shares get called away.
Yeah, I mean, I don't know what's going on, and my mouse is not working at all.
Want to rejoin? You can join. You can rejoin in a couple minutes.
Okay, let me. Yeah, if you want to do that, I'll rejoin here in just a second. Let me figure this thing out here for a second.
Okay, I'll put you down here. On Beneficial side, I sold $40 calls on Hood for Jan 2025 like a few days ago that are already up nicely enough to close low key. All right, that's not bad either. Yeah, up 30% on those covered calls in like 2-3 days. I mean, dude, that's why we closed out of the 1850 put on Hood, because we were up 50% in 2 weeks. There's no point of waiting another 4 months for 50% returns if you're already up 50% in 2 weeks, especially if that position could go against us. So yeah, it makes a lot of sense to get in and then potentially get out as the call or the put can appreciate. Okay, what else do we have going on? I think we have a couple of different things as we wait for TJ on this. We're going to look at our CrowdStrike position. We have about 300 shares of CrowdStrike, and that one is an interesting one given it's running. I think we have some covered calls here, so we're going to have to figure out how we navigate that one. And then we'll also figure out the Amazon position we have as well. We're back?
Yeah. Okay. Awesome. Yeah, I don't know what happened there. Yeah, somebody asked maybe the battery's dead. I actually just charged it the other night. Did I totally have to remember that you got to charge these little things? I didn't know that until I was in the middle of a live one day and the shit just stopped working. I thought it was like a magical mouse that was like solar powered or something.
Dude, I would pay $5,000 for an iPhone that I would never have to charge. I would pay so much money. So much.
So CrowdStrike's been fun. This is one that, we thought it'd be a good idea to build a position on. And I thought we did okay. I remember the first batch, we bought them at like 280 or something crazy. And then it crashed down and we averaged into it. Now we're at $300 settled in. So we're up a decent amount on the shares. And then I've been working with covered calls ever since. So now we're sitting at a 270 strike for 1018. So do you want to walk people through that scoreboard right there a minute?
Yeah, so 300 shares, 246. So we're up 17% of the shares. CrowdStrike's up 5% of the day. We are agreeing to sell to CrowdStrike at 270 on October 18th, and we got paid a decent premium for that. The question here is that now that it's healthily above 270, do we want to roll this, or are we comfortable just kind of letting go of our shares at 270? And I think we kind of don't have to make a decision, right? We have a lot of time on the clock.
Yeah, so essentially we just look at the math, right? So we've got a 270 strike. These are the knowns. It's like when you're solving for X. So we're $18, $19 in the money. That's the intrinsic value. Because this option consists of, these options price consists of intrinsic value plus extrinsic value. That's the components of an options price. So essentially you just start calculating the math. And if there isn't any more extrinsic value left on the contract, it's probably time to consider rolling. But here we've got $18.50, call it $19 of intrinsic. You take that 19, that coefficient, subtract it from the options price. So that still gives us about $6.45 of extrinsic value. So why is that important, Amit? Why is that important? Do you really know what it's important?
It means that we have a lot of time left to let this play out, and it doesn't make that much sense to not only roll it, but the premiums aren't going to be worth it when you do the math on extrinsic and intrinsic to make good on the close that we have to make on this current price to then open a new one.
So if I was your math teacher and I asked you that question, and then based on your answer, I would say that you got like a B plus. So these are the things that could make it an A plus answer, because you're missing a couple of critical components. The reason that's very, very important to understand the dynamics of intrinsic and extrinsic value as it relates to your options price is because that's going to give you the likelihood scenario of your shares getting called away early.
Right.
Because the only reason to look at the math is because you're worried about losing your shares, right?
Okay, so let me try again. So
move on. You don't have to look at anything.
All right, so let me try again. So the price right now is 290. Let's call it 290. 290 minus 270 is 20. So 20 is our intrinsic.
Right.
And then the 505, because the price is 25. 25 minus 20 is 5. So 5 is our extrinsic.
Right. So stop right there.
Okay.
So that is the profit per share.
Right.
That the counterparty would have to sacrifice in order to take ownership of your shares right here, right now. That is your protection, right? That is the protection that you have against getting these shares get called away early.
Right. Because if it was $20, then we have no protection because
Right.
that's the profit the counterparty would make. That 505 on the extrinsic side is the
Right.
protection we have. Right.
That is why it is important for people to understand the math. That's why I always say, F your feelings, put those in a closet somewhere. There's no money over there. This is where the game is played. So anytime that I'm scrolling through the portfolio late at night, and the wife's like, what are you doing? I'm just looking at the extrinsics.
And we want the extrinsic to go to zero, correct?
The person on the other side, well, yeah, it's going to go there by default for us because we're collecting theta. But I want to make sure that the extrinsic value stays juicy enough on our side so that I don't have to worry about it if it's a cash secure put or a covered call, because I'm always protecting against early assignment.
So if the extrinsic went to zero like sooner than before expiration, that means we are losing on the covered call.
Facts. I mean, we're already losing. The
Right.
thing is it's still a manageable situation. I can
Got
show you a $12 covered call on Palantir for January that is no longer a manageable situation. I did a 45-minute segment on this thing on Wheelers the other night. It might be too boring for some of y'all, but if you really want to understand the math and all the psychology behind this thing, go watch that segment from Wheelers on Wednesday, because I have put myself in a shitty little situation that I could have gotten out of on August the 5th, but I had an implant that I was dealing with. So It is what it is. It ended up costing me about $125,000. I mean, I'll show you all of it here, guys. This isn't for my benefit. This is for y'all's. I'm going to go to sleep tonight and I'm still going to be worth a shitload of money. That's the reality of it, right? But I have it in my heart to want to teach a handful of people that want to learn. But I'm also one of those people that here's the water trough, you're the horse. You either drink or you don't, bro. Now we're leaving. You know what I'm saying? Like, I'm not going to beg you to want to learn how to make money in a very strategic way in the stock market.
So this $4.55 of extrinsic, if CrowdStrike were to go to like 315 today, that 423 would start to collapse, essentially,
Right.
because our covered call is so in the money
Facts.
that at that point we kind of just got to accept it's not going to be that manageable.
That's a fact.
Okay.
On the other side of the coin, CrowdStrike dips to 275. Now we're in total command of this position again, even though we're behind the 8 ball. So now we can just wait it out and keep collecting theta and collecting theta and collecting theta and getting closer to our expiration date before we make the move.
Right.
So essentially we collected all of that premium on the front end. So we want to keep as much of that premium as we can until we enter into a different contract.
And it doesn't make sense to roll right now because there's too much time left on the contract too.
You can. A lot of people like to handle their business early, but I'm like, well, why would I want to pay back that $4 or $5 in extrinsic value right now? Because somebody has to pay it because it exists in the contract. It doesn't magically go away. You can't wish it under the rug. You can't sweep it under the rug. So either the counterparty pays it to me, and from the standpoint that they're kind of doing me a solid if they take these shares away from me early, because now I'm getting the payday that I'm otherwise not qualified for until 10/18 or whatever the expiry is.
Right.
And now I can go do something else with that money. If I'm of that mindset that I don't want to do anything with it, just give me my money. I want to move on to something else.
And how much credit do we receive for this cover call if we go down?
So this has already been a couple of rolls. Like I've already been in this thing for a little bit. So I guess we can show that for context.
Yeah, let's see that.
So I mean, this entire position has been built over time, right? And again, this is the reason I sold cash secured puts, is because you're trying to scale into a position. And sometimes if it just makes sense, you're going to see that I'll just buy the shares outright. So I sold the cash secured puts. We got the 1300. We closed it out. We got the 640. So we locked in a little bit of money. We're just filling it out because we don't know, right? Like I didn't even know who the CEO was at this time, guys. It's a true story. And then I was like, I'm going to take a stab. We bought the 100 shares, got those for 280. And then tried to do some other stuff. It didn't work out. Then I immediately sold cover calls against those shares. And I'm like, well, give me a rebate of 1125 for doing so, because then that puts me over here at 270. A little bit easier to stomach, because this is when the world's going to start falling apart. We didn't know it yet, right? Remember when that happened?
Yep.
So then sold more puts at 250, got the 900, sold more puts at 215, because then the world had already fell apart for these guys at that time. That's why y'all can see a drastic price, because I'm over here selling cash care puts at 215 when I was buying them outright at 280. So obviously market sentiment changed there for a hot minute on CrowdStrike. And then we're doing credit spreads. We're screwing around with this thing. I bought another 100 shares at 210, brought the average down to about 250 or so, 240, whatever it was. And then we're just selling cover calls, selling puts, collecting premium, rolling when necessary, doing the deal, right? Doing the deal. And then over here, I bought another 100 shares at 247. And that's kind of about the average that we have now. We've been selling calls since at 250. Rolling covered calls, like you'll see there that we already had the 3 contracts together. We rolled them from 250 to 260. So we went from 823 to 920, picked up $2,000 for that. And then you'll see the roll here recently, right here. I went from 260 to 270, added another month to the contract because the story's still good. I still want to be in the stock. And I if I could do this for the next 3 or 4 or 5 months. And I started at a 250 strike and I end up at a 300 strike and I no longer want to mess with it. Even if CrowdStrike is at 330 or 340, I probably wouldn't really care because I make quite a bit of money along the way, because
that's what I think. If we get this thing sold at 270, it's also not the worst thing in the world because we wanted this to be a big position, but that capital could go into some of your other higher conviction plays too.
Yeah, and that's where it helps to know your numbers. Like right now, do you know what the adjusted cost basis is on CrowdStrike for us?
I think you're like at 235, something like that.
220.
220. Wow.
So I'm like 220, 250, make $50 a share on 300 shares. It's not bad. It's not the greatest thing, but again, this helps me to manufacture the win because here's what I've accepted about myself. Somebody was being a dick and said I'm not a good investor or something like that. I just want to talk. Here's what I've accepted about myself that maybe some of you haven't accepted about yourself. So I'm not that good at picking an entry point, dude. I'm not that good at picking an exit point. In other words, it's very, very difficult for me to buy low and sell high. I've accepted that it's hard for me. But if I can sell enough puts, enough calls, and roll when it makes dollars and cents, now I can look at the entire picture collectively and be like, holy shit, I outperform probably 85 to 90% of retail investors out there because I have created a strategy that allows me to manufacture the win in a very big way on a consistent basis.
Right.
So I figured out who I was in the market. I wasn't real good at buying low and selling high. Some of you guys, if y'all have that, congratulations. I don't have that. I don't want to look at charts all day long, dude. I just don't want to do all that stuff. I don't have that kind of time. I'm trying to live this beautiful thing called life. So I pick a strike that works for me on the entry point, and I pick a strike for me that works for me on the exit point. And then whenever I have more information and I'm like, hey, I can milk more out of this position. I can grab more profits potentially from this position. Then I'll roll because it makes dollars and cents. If it doesn't, fuck it, move on. You made money. Go find your Ferrari. Go wipe your tears with the profit. Nobody wants to hear it. No one wants to hear it, dude. Nobody wants to hear somebody with quite a bit of money crying about, how much money they left on the table. You know what I'm saying? When there's people out there struggling to pay the rent. I mean, think about it.
It was also one of the things I talked about yesterday. It's like we are so blessed that all of us even know about the stock market. And when we take a profit, it's this toxic mentality. It's like, well, if I waited 2 days, I could have made another $5 per share. It's like, dude, you made money. Like if Palantir goes to 45, I don't think Karp's gonna be crying that he sold at 36.
No, wipe his tears with the 300 million, bro. He'd probably get a haircut parted a different way now. I don't know.
So speaking of that, let's get into Palantir. We don't have to go through exactly all the stuff you talked about on your channel, but in general, how are you navigating the Palantir situation?
Well, I'm actually excited that Karp sold a little bit. He might be giving me a chance to remedy this situation. Okay. Thanks, Alex. Salute. So obviously Palantir's at 36, dude. This thing is just a cultural phenomenon, dude. People are gonna get Palantir tattoos. It's insane.
I like that. I've never heard that phrasing, a cultural phenomenon. I like that. That's the right way to put it. Yeah.
Yeah. Like I said, whenever people say it's a cult, that's what I think of. I don't think of the David Koresh thing and going to Waco and everybody committing suicide because I'm Jesus. I don't think of that. When I think of cult as it relates to a stock, I think of a cultural phenomenon. Because this thing, bro, it's got momentum, bro. It's got the mojo. It's got people like Kramer trying to make sense of it, and all he can do is talk shit because he's angry because Karp won't go on his channel. I mean, the dude is butthurt, bro. Kramer is legit butthurt over Karp. I'm sure you probably already made videos about it.
No, it's funny because Snowflake dude came on his channel, but Snowflake's, we've seen what happened. Karp won't come on his channel, and Palantir keeps going up, and so.
Oh, if Kramer keeps talking shit, there's no reason for Karp to come on his channel.
There you go.
I mean, that's the reality, dude. I mean, you got to kill him with kindness. You're not going to do that by making some snide-ass remarks about the company just because you're probably mad because you missed out.
Yeah.
I mean, Kramer just looks like he's angry because it wasn't in his little investor thing that he promotes. You know what I mean? Like, he missed out, and people probably told him, and he was just like,
dude, it would have been such a good story too, because like Palantir's the typical retail stock. Kramer says he's for the little guy, right? I mean, if he had just advocated for Palantir at $7-8 and just rode the story, he would get a lot of respect. But he chose to be the corporate kind of personality that he is, and he ended up, picking Snowflake, which was the most corporate thing you could pick. So,
agreed. So on the surface, it looks real good, Amit. 23,000 shares, 1683, 444 grand. If we just stopped there, I did good. All of a sudden, I probably got a bigger channel because, I know what I'm doing now, right? So, because I control price action on Palantir, get the fuck out of here. So anyway, I thought it was a good idea to sell covered calls on these things, and that is not working out very well. So I've got $12 covered calls that I bought these shares at like $6 for context.
So hold on, let's do the math there. So the price is 36 minus 24.
125 grand. So I could help you out.
No, but I'm just doing the intrinsic and extrinsic. So
here there is that. Yeah.
36 minus 12 is $24. So that's your intrinsic, and you have 40 cents of extrinsic, which means it's very hard to manage.
About 25 cents.
About 25 cents of extrinsic, so it's hard.
So if somebody wants to take ownership of these shares right now, the only thing they're sacrificing in order to take ownership of them early is about 25 cents per share. So the question now becomes, why do I still own these shares? That's a head scratcher for me. So I'll tell you why.
Someone hasn't exercised yet, is what you're saying.
Yeah, I'll tell you why. Because maybe the person or the thing or idea, I don't know who it is anymore, right? Like, I don't know who you're paired up with. That's the thing. It's like blind dating. Maybe they don't have the money to exercise. Maybe they were only in it to flip the contract.
How much would they need to pay to exercise?
Well, they got to pay me $5,000 times 12, so 60 grand. Right? Because I agreed to sell the shares for 60 grand, and those shares are worth what, about 180?
Basically, yeah. Right now.
Well, that's how you calculate how much money you're leaving on the table. It's very straightforward.
So do you think they're just waiting until expiration to exercise?
I don't know, but I'm hoping that Palantir goes like 30, because then maybe now I can roll out to where it makes dollars and cents. Because I've looked at rolling this thing, dude, so many different ways, and I just can't get to a situation where it makes sense. Like, dude, I've literally played this game right here because I'm long Palantir. Palantir, there's nothing that anybody could do right now that's going to make me not want to be in the stock. So I'm like, okay, well, how much more capital appreciation do I want to qualify for? I know that I got to make good on the 2440, right? That's the options price of the current contract. So in order to take the house off the market, just to go back to that analogy from earlier, I gotta pay the piper 2440. So there's nothing here that I can roll to, even if I go the furthest. I think that's the right term. The furthest or farthest that I can go on this options chain is 847 days. And going from 12 to 20, which now qualifies me for $8 more on 5,000 shares, that would be 40 grand, right?
Yep.
It's still going to cost me 20,000. So now I'm like, okay, I got to give 20 to qualify for 40. So that's still pretty decent over 847 days. Like, that's the basic math that I look at, because it's like, now you're looking at the dead money. And then the other thing that I have to look at is, okay, well, I want to get $60,000. What could I do with that money, with that 60 grand over the course of the next 847 days? Would I be able to make 20? Because I'm qualifying for an additional 20 just by doing nothing. And essentially my bet is that Palantir is going to be over 20, so that it works out. Because this is what you don't want to do. You don't ever want to roll for a debit just to watch the stock crash all the way down, and now you got kicked in the balls twice.
Right. Because if the stock crashes down, then there was no point to roll.
There's levels of stupid. I can't even tell you where that one is on the IQ scale, but it's roll low. Like, it's just no bueno. So I haven't found anything that is that compelling. Or I'm like, well, maybe if I go over here, does that work? I know it looks crazy. I got to give 50, but then now I'm going from 12 to 30. So that's $18 in capital appreciation. Multiply that times the 5,000 shares. It doesn't really quite math. So right now I'm kind of leaning towards letting the shares get called away. And then with that 60,000, I would just sell $60,000 worth of cash secured puts, hopefully successfully over and over, and I can get paid to buy a dip at like 28 or 29 if that happens. If not, I'll just try to get my money that way. And then I'll thank my lucky stars that I saw this happening. I saw this happening way back in the day when I was in Houston, Texas, because I've been in this thing on this account since July the 18th, 2022, selling puts over here at $8. So I'm pissed off that I didn't buy more shares down there, just like all y'all. I'm not any different than you guys.
Me included. Yep.
But then I'm thanking my lucky stars that I put my arms in the air on September the 20th, 22nd, 2023, Galleria Omni Hotel over there in Galleria in Houston, Texas. And I said, fuck it, I'm going to buy 5,000 shares of Palantir because I'm just going to assume that I'm going to lose these shares at $12. So I bought those shares back already in my mind. And then 5 days later, I said, you know what? Fuck it. I'm going to buy them again. And that's why I bought another 5,000 shares at $14.70, all in anticipation that I was going to be here, right now, because I saw the movie unfolding, but I was too damn stubborn to just go take an L on a $12 covered call. I was like, I don't want to do that. I'm going to let it play out. I just want to accumulate more shares over here. And it was real hard for me to average up them because I thought that Palantir was severely overvalued at these levels.
That's when they were growing like 13%, you know.
Looking back, pretty stupid, but that's what I thought. Like I legit thought, hand to God, that these were not good buys for me. And they ended up being the best buys of the year for me, right? So it is what it is. And then I said, man, I know this is crazy. So I'm selling calls, collecting premium on one earnings. I locked in like $60,000 in profit. I made a video about it. Rolling some covered calls, got 16,300. I mean, we're collecting money with this thing along the way. So not always lost. But then I said, somewhere here at the $20 range, I'm going to buy. Oh, this is where I already started the 500 share campaign recently. But did I even buy? Here we go. 5,000 more shares at $20.47. And so I bought that tranche that I'm about to lose 3 times over in my mind. And then I started a DCA on your channel every Friday buying the 500 shares. So I got the 500 shares there, the 500 shares there, the 500 shares there, twice over on the 6th because this was what? Inclusion day, right?
Yep.
So I wanted to buy those. And then I've been selling covered calls over and over on those. And now the way that it sits is I've got covered calls for January of 2026 on Palantir at $35 and at $40 because I wanted to finance rolling these covered calls that I'm underwater on. So on these right here, like I positioned myself to execute, but then I couldn't pull the trigger. So on September the 16th, I got 26,250 for rolling cover calls from 30 to 35 a year out. So I pocketed 26,000 in premium, and then I pocketed about $10,000 in premium for going from 40 to 45 a year out, 40 to 45 a year out. And the idea, Mitt, was that I was going to use all of that money, 8,700, 1,700, and 26,000 to finance rolling those $12 covered calls for it.
Right.
So in other words, I was going to pay them with their money, right? I was going to use other people's money to finance this. But then when I started doing the math, it just didn't really math. So now I'm like stuck.
Yeah.
So I think that the best thing,
the only thing that is going to help is Palantir crashes for you right now.
a little bit, or just accept the fact that, hey, you got it wrong on that batch of 5,000 shares, and that's okay. But I got it kind of right on the other 18 that I would be holding on to since. If that makes sense.
Correct. And it is what it is. Sometimes you sell calls on, this is the downside to wheeling, right? Sometimes the stock goes parabolic and you sell calls you shouldn't have. So.
Facts. But dude, I'm not going to complain, dude, because I've already realized more money in Palantir than I thought that I would. going in. You know what I mean? So it's just like, and I'm still thankful that I got 18,000 shares after those 5,000 are called away. Eventually I'll buy 2,000 more and get back up to 20. And I got them for sale at 35 and 45. It's not causing me a lot of stress. I'll deal with them in like 6 months or so, and I'll push them out another year. Hopefully I can pick up another 20, 30,000. So now I've manufactured a pretty big dividend, and it's a position that's very low key for me now. I don't have to jack with it.
Right.
I don't have to jack with it, and I want to see it play out until the year 2030. That is when I have it on my journal to really consider where I'm at with the investment thesis in Palantir. So I'm long to the year 2030 right now, the way it stands.
Can we look at TSLL, because we have a big position in that, and Tesla ran up this week.
Yeah, this position, I would like to get more shares, but we got the 10,000 shares at 942. So that part's good.
And for those that don't know, this is a leveraged play on Tesla.
Right. So 2 times, I think, right? 2 times. Yeah.
Yeah.
2 times leverage on TSLL. Pays a small dividend as well. Steve Fiorillo brought that to my attention last night when we talked on the phone. So we got 6 strategies on, $733,000 in collateral. So that's a commitment to buy $733,000 worth more of shares at a certain price. And then we've got all the shares for sale via covered calls. And we also have long calls that we bought over here as well. So this thing's printing money. We're up 80,000 on the shares. And then we're up 22,000 on, or we're up 22,000 on the shares and $80,000 on the option. And we have an agreement to sell these shares at 1150 on 927. We've got an agreement to sell another batch at 11 for 1011, and an agreement to sell another batch at 15 on 1018. And then we have a commitment to buy a shitload of shares at 773 for January, $60,000, 60,000 shares worth. And then we had got an agreement to buy 40,000 shares at 673 on 1/17/2025. And then we also have an agreement in 2026, January, for the right to buy 10,000 more shares at 573, which is what a long call is.
How much are we up on the puts? Can you go to that?
On these right here?
The 6, yeah.
Yeah.
32%.
32%. We're up quite a bit, but TSL came down a little bit today. We're up about 50% yesterday, or 45%.
You think the 10? I think 1010 is sell the news, but I think if we get a good pump to 60 or 70%, it's not crazy to close those.
Oh, dude, I'm all about it. I'm all about it. I have it in the journal there at 70, where you're going to really take a strong look. And if that happens before 1010, I think that it makes sense to take that money off the table and play a game called wait and see.
Yeah. Yep.
On dispatch. On the other ones, I'm not as convinced, because, dude, at 673, it's just too compelling to not just want to take ownership of more shares.
Yeah. Yep.
Because that's a pretty damn good entry point regardless of what happens. You know what I mean? It's a 12 delta. Like, then that's where, whenever you're going to do this kind of stuff, if you legitimately pick, guys, this is the goal for you guys. If you legitimately pick a strike price that you want to own the shares, it's real hard to paint a scenario where you lose there.
Right.
Because you're okay taking ownership of these shares.
That's the best part of this strategy. Yep.
Dude, so there's nothing that Tesla is going to be able to do on 1010, even if they postpone some shit, bro. I'm just going to look at it as another opportunity to build into my favorite stock via this leveraged ETF. And then I've got, a substantial position in actual Tesla as well, because a lot of people are like, well, why not just Tesla? Well, I got Tesla too. But I wanted to show a small account strategy, because not everybody has enough for 100 shares of Tesla, but there's a lot of people that have enough for 100 shares of TSLL. So that's why I wanted to add it to the portfolio. And plus, I think Tesla going to go to like probably 270, 280 by the end of the year, because I think that lowered interest rates are going to be good for this company as a whole. So I would position myself to make bigger money down there, because this position over here is doing well, but I am babysitting a covered call for 225 strike for January. But then these leaps that I bought, the right to buy 15, whatever that is, 15 buys. How much is that? 1,500 more shares of Tesla at, thank you, at $150 on or before January the 16th, collectively doing pretty good on those options. So
Real
down-
quick, someone just bought 4.6 million shares of GameStop. So GameStop's up right now, but
That's crazy. Yeah.
it'll, that's GameStop for you. So there you go.
Well,
Okay. So
one last thing. I know that we run a little long, but I wanted your help on this one, Amit. I was talking to Steve yesterday.
NVIDIA. Well, I was just going to bring up, let's talk about NVIDIA. What do we got there?
Bro, I feel like we're underweight NVIDIA, and I know that these aren't the best prices, dude. I recognize all of that stuff. But it's not so much about where the stock is right here, right now for me. It's where do I think it's going to be in the next 2 to 3 to 4 years. And I think that
Basically, you're
NVIDIA
saying
has legs.
Steve NVIDIA pilled you last night. is
I
what you're
did. He did. Fucking Steve.
saying. Of course he did. Of course.
I wanted to talk to you right here, right now. What do you think about just doubling the position? Because we got such a small position in it, and I've got so much Neo. It feels kind of retarded to not have enough Amazon and NVIDIA in the portfolio. Like I feel like the little street cred that I get is getting tarnished every day for not having more NVIDIA and Amazon in the books.
Dude, I'm down to do it, but I'd rather do it through puts because I think that election is still going to bring volatility.
Okay.
And if we sell puts at a strike we like and we own those shares, that's fine. But outright buying them, I think there's way better entries.
Yeah. So we agreed. So we just closed 5 cash secured puts at 115, and it was a very profitable campaign. We babysat these for like a couple months, made a couple grand. So that part's good. So do you want to do 5 or do you want to do 10 and maybe like
Let's
one
look
10?
at-
What are you thinking?
Let's look at the premiums at 100. I like NVIDIA at 100 a lot. And I would do 10 puts on that if the premiums make sense.
Nah,
Not worth it. Yeah, 96
how
cents.
about 105, dude? Come on, Amit.
105 is not horrible. That's not horrible. I don't. And yeah, I like 105. Our adjusted would be 103 point something. That's
So
fine.
let's see what the math looks like. I just like to put the numbers up there. So let's just say 15 contracts. It's NVIDIA, dude. So what is that? So how much money is that? Do I have enough to do that or no? Is that a lot of money?
Press review order. Let's see how much.
Yeah, dude. That you see how the other one, Robinhood's a lot more compelling when you just do the math real quick on your head.
It's 1.6%, and we would own that's 1,500 shares. Oh, so you're going. I mean, it would be a hell of a position. It would be Steve pilled officially if we own 50.
Yeah, but what about so hear me out, right? This is where I'm a little more aggressive, obviously. But hear me out. What if we did it over here, knowing that this isn't a favorable entry point? But let's just say we're right, our return is better. And we know damn well that we're going to roll these things out and our take ownership price, if you will, is really 100, but we're willing to babysit the trade until we can get it at 100. That's the reason that I sell very aggressive cash secured puts, because I know on the front end that I'm just going to roll this thing to my desired strike price. The issue with the desired strike price, it doesn't pay shit right now.
Yeah.
So what do you think?
I'm not opposed to it. I just think that
I mean, you're helping me with this. I don't want to just like pull the trigger and you're like, like now all of a sudden you're like uneasy about it because we're going to blow up the performance of the portfolio and the whole deal. But I'm just saying, or what do you think of scaling back and then let's just do 5?
Yeah,
and then we'll see what happens.
There's 2 things I'm worried about. This is still the worst month of the year, and we have a week left to finish this month out. And if we end this year up 5% or whatever in the markets, I mean, that's just like a month for the years, or a year for the books is what I'm trying to say. September doesn't happen like that. And then 2 is that election, dude. I don't like if Trump wins. Is that good for NVIDIA if he wants to build chips in the United States? Like I don't know how the market's going to evaluate it. I agree with you and Steve that it's NVIDIA. It doesn't matter, but I think our entries could be better. So I think starting with 5 is good, and then we scale it out. I
think because I would like to get to 2,000 shares of NVIDIA, but I don't want to like pay 125 for them like we have now. And when we bought the first batch, it was like 300 shares of like 130 something.
Yeah, we definitely overpaid on that one. Yeah, we just said fuck. Right, it's NVIDIA. It'll go to 170.
Fucking NVIDIA, right? The way you were saying.
Then August 5th happens. We're like, oh, 130 was kind of aggressive.
But this is where investing is so hard, guys, because this is a myth. Here's the thing. How good were NVIDIA's last earnings?
Oh, they were incredible. Just incredible.
And how good do you think their next earnings are going to be?
I think it's going to be incredible as well. I just don't know.
Exactly. So I think that what happens is a lot of investors, they the macros. But at the end of the day, valuations matter, dude. I can make an argument that this damn thing here is cheaper than fucking Intel.
Yeah, you can. That is true.
I mean, you got one that's got all the fucking mojo, and you got another one that, I mean, I'm heavily invested in Intel. I'd rather have that money in NVIDIA right now, to be honest with you. But I think Intel's going to work out in the long term. But I mean, you got one that the government's going to have to prop it up versus this one is propping up 3 or 4 or 5 other companies that they can't really do their thing without NVIDIA.
Yeah. All right, let's do 5 of them. I mean, if we got to own NVIDIA at 107 adjusted, I don't hate that at all.
Yeah, and it's a small bet, dude, and we'll manage it accordingly. Just wanted it on the books.
There you go.
So Steve pilled you too, huh?
Well, Steve's been Steve pilling me for a while. Let's look at Snowflake. Do we want to get rid of this one? Because we're up on that, right?
I don't know if we are, dude. I don't ever look at this one, dude. Now, dude, we were doing like 40% yesterday. The market taking a shit today. What's going on? It's Friday.
Yeah, it's Friday.
Yeah, dude. I think we
want to just free up this capital and get out of it. You kind of
no, dude. It doesn't cause me any pain.
All right.
And I mean, is the stock? I mean, first of all, this is what I always ask myself: is the stock going out of business? Is the company going out of business right now?
No, not at all.
We just don't like it, right? But that doesn't mean that we can't still just realize a profit on it.
Yeah.
Like, we're not, this isn't an emotional relationship, dude. We're just trying to make money. And I remember you saying, we had to buy it at like 115, 116, 117. It wouldn't be the end of the world.
It would not be the end of the world.
I know that it feels like we're betraying Team Palantir, but we're just talking about making a little bit of money here.
Your boy Jeremy Rischel just sold 68,000 shares. That's okay. It is what it is. That's the SoFi CTO. So
is he the guy that's been selling this whole time? Or
this is the motherfucker who's been selling for like a year, dude. He was selling at $6, $7.
Yeah, but the ball-headed dude like me, the Galileo guy, he sells too. What's his
Derek
name?
White? Derek White.
So the only one that buys consistently is Nodo, right? That's like
the only mother effer buying this stock is you and Nodo. That's it.
And Anthony Nodo doesn't even know who I am, bro. Somebody asked me on my tweet. I was like, dude, I'm like 102% sure this dude has no idea that I exist. And that's okay. I think, he's got bigger things to be more worried about, like than a little retail investor like myself. But
in general, I think it's not just SoFi. We're seeing a lot of insiders take their profits. And so it's one of those things just generally to be remember, like people are cashing out before the end of the year. It's not.
Do you blame them though?
I don't know, not at all.
I mean, isn't that the dream to sell at the top? I mean, the market is at all-time highs. You know what I mean?
Real quick, thank you, Manny247, for the 20 gifted memberships. Really, really appreciate that. Nady, Value Mine, Don, John, Roy, Matt, you guys all got memberships. Chris, Daniel. So thank you for the 20 gifted memberships. Appreciate that, Manny. Thank you so much for that.
So last thing, because I got to run. My wife's blowing me up. We've got to take the damn dog to potty training class. Steve told me that in the not too distant future, can you pull that up real quick? The chart just real quick, the Amazon. That was going to be the first company in history with $1 trillion in gross revenue for 1 year. And like,
so the more conversations you have with Steve, the more of these stats he's going to pull out of his ass. And he's gonna sound so convincing with them. I'm not saying he's wrong.
He is convincing, bro. He is, right? The fucking dude he's a salesman, dude. What does he do? Does he sell crack in New York? What does he do?
I mean, he knows how to talk. Let's just say that. He's in a high level at his company because he knows how to talk. So yeah, they will do $1 trillion in revenue probably by 2029, I think.
So I mean, aren't they gonna go to 300 eventually?
Well, not even that. The technical show of as soon as Bezos buys the Celtics and gets over his selling, I think this is a straight trajectory to 300 over the next 2 years, easily, if we avoid a recession. So, yeah, I like Amazon. I've loved Amazon I don't have any Amazon, but I think it's one of the best out of the Max 7. And the risks to Amazon going out of business, not going out of business, but like losing market share versus Google on search, I think are significantly discounted for Amazon.
There's a guy saying that he made him want to buy Pokemon. Go Pokemon. Pikachu or whatever.
Have you seen the show Entourage?
Yeah, bro, dude. Like Johnny Drama, Turtle. Turtle was my favorite character. I thought he was cool too, Eric. the main character, though, I thought he was not that good of an actor. That was the only thing that I did not like. No. Vince Kinnear, is it? What is his name, guys?
Because Steve's trying to get me to watch this damn show.
Real handsome fella. He's just the weakest actor, bro. Turtle was the fucking best, dude. Turtle was the best. Some Ferrara dude. And Johnny Drama might be Dylan's brother or something. I'm not sure, dude. This dude was good too, Johnny Drama. And then Ari, bro. Ari's my favorite character. He was like the agent, I think.
Well, Steve's telling me I got to keep watching the show, so he's convincing. Yeah. So, what do you want to do with Amazon? You think about selling more puts, or how are you thinking about it?
Eventually, I want to get to 2,500 shares. I just think that this needs to be a top 5 position. I don't know that right now is like the opportune time. I thought maybe at 168 it made sense. I just wasn't able to pull the trigger. So I sold 5 cash secure puts recently, and it worked out. But it's just, again, the thing that sucks about this one is the premiums aren't that good. You'll see it there. I sold 5 at 175, and then I got out of it. So I made, like $500 real quick, 500 or 600. So what do you think about helping me adding this to the segment and helping me with this and navigate this Amazon position?
Yeah, I think it's a good idea. I think out of the Mag 7, Amazon has the most potential with advertising. AWS is still the best or the fastest growing cloud, not the fastest growing, but the most amount of TTM revenue at 100 billion for a cloud computing. They're better than GCP and AWS in terms of pure volume. And then you got the e-com business that if they can get their margins above 5.3%, closer to like 6, which would make operating margins about 10.7 to 11%, they're going to be printing money off the 50 billion a quarter of volumes they have on e-commerce. So
Amit, how in the fuck do you know all this, yo? Like, Amit, what are you doing? Did you just fucking take in information like 23 hours a day? Like, you're like a fucking little encyclopedia now for investing, dude. Like, what the hell's wrong with you?
This is why I need more money to work with, dude. I have all this information, but I don't have the money to work with the information.
I say this out of the kindness of my heart. Bro, you need to get laid, dude. What the fuck is wrong with you? You could be like a fucking contestant on Jeopardy for investing right now.
Dude, I'm staring at 3 screens all day, condensing information. But also, this is what helps make the market open really fun. It's like you can pull up a lot of shit. You can talk about it. But no, you're right. You're definitely right.
Like a mint, bro. Dude, just fixed, I think $200 you're paying him to leave, bro. Like, my goodness, dude.
Well, if you want to buy more Amazon, I definitely have the DD for you.
So yeah, dude, I do. DD is not my strong suit. I don't like doing it, bro. Like, God bless you guys that can research stuff. Dude, like,
but see, that's the thing. That's the thing. I actually like doing DD. I enjoy it. Like when I like CrowdStrike.
Yeah.
When it fell, I liked listening to all these employee interviews and shit, trying to figure out if everyone's wrong, because I like to be right, and I like to figure out is there a chance to be right.
But this is the issue with doing these fucking companies that are so rock solid is you go do 5 contracts and look at that, dude. Tying up 87,000 and make $589. You know what I'm saying? Like that.
Yeah, but if you have to own 500 shares of Amazon over 500 shares of Celsius, that's the difference, right?
No, but that's what I'm saying, and that's why there's not so many of these stocks in the portfolio, because I'm trying to hit 25-30% returns annualized on premiums, and this shit's not going to do that, but it could also give me some serious capital appreciation. So I feel like the only thing that makes sense for me on Amazon here is just maybe scooping up another couple hundred shares and then riding the cover call train, because I'm already babysitting these cover calls right here. And
well, I don't like that. I mean, no, I do like that, because you're riding the covered call with Bezos, because Bezos is an artificial covered call already for everybody. So
yeah, I just think that this is what makes sense for me. That I'm just going to DCA into this thing until I get to 2,500 fucking shares and just play it for when do we think this 300 happens? 27, 28, 29? When do we think it?
It depends on not having a recession. I don't know if do you think today's the best entry, or you don't care?
I don't give a shit, bro. That people do that is a losing game. Because I look at 3 to 5 years from now, I'm gonna be pissed off if I don't have these shares in the portfolio. And then it'd be like, oh, it dips to 170, cool. Like, it's just, that doesn't matter because I have a long-term mindset when it comes to this kind of stuff. And it's just about positioning the portfolio, dude. Let me show y'all a fucking company here that doesn't even deserve to be in the top 20. And it's chilling over here. I'm going to put this on equity. That would give y'all a good fucking laugh. Look at how much NEO I own, bro. 367, and Amazon's below NEO. So it tells you how dumb that is. But again, entry points matter. So let's put it into context. I'm up a little bit on some NEO, and I've got it chilling over there for $8 January of 2026. We'll see how it plays out.
Yeah.
But I just think, damn, Amazon needs to be bigger than NEO, dude. I mean, come on, my goodness. Or what's your little thing? Oh my goodness, that's like your little tweak thing, right?
I don't know how that became a thing, but every time I see the Nike CEO give, I'm like, oh my goodness, the Nike CEO. Like, it's just, it always becomes so much. So you don't want to sell the covered calls on those 500 shares today, I would imagine, because it's a
I kind of do for protection of the downside.
Okay, so let's do that.
I think that we still, isn't this what's called, I call it September. What is it? What's the little thing that they use for September?
I don't think they have a name. I don't know if they have a full name. It just sucks, you know.
Yeah, like so it's called Uptober, right? Is that the little? I feel
sometimes October's good, but sometimes October sucks too. So, you know, it's still a volatile month.
Yeah, let me hold on. I want to match them up because I have OCD. I have covered calls over here. Yeah, it's for 1018.
Oh, it's goodness gracious. That's what it is. Yes, Philip.
I have. What's it called?
It's goodness gracious. Guys, if you want to get the Wheeling spreadsheet, email amit@dailypalantir.com, and I will send you the same spreadsheet TJ uses every day for Wheeling as well. And then
I'll just do it there. I'm not going to fight for the other dollar. I don't care. So there it is. I got a little rebate of $12.39. So that's like an artificial way to get a lower interest.
Well, what strike? What strike did you pick?
195.
195. Okay.
Yeah. So now I've got them at 175, 185, 195, and I'm cool babysitting those for the next 3 to 5 years. So that's why I sell very aggressive cover calls when I'm like legit, like, yeah, I'm long this stock. It doesn't matter, whatever. I'll just babysit the shares. Anyway, dude, appreciate everything that you do, man. Keep rocking it. On October the 17th, I don't know that I'm going to be able to do our segment because we're going to be flying to Irvine for a Riot roundtable discussion.
That's really cool.
The Bitcoin miner.
That's actually very cool. I'll do you a better one. I'm not going to be available October 17th anyway because I'll be at a wedding.
You're in India, right? You're in India.
Yeah. October's gonna be a little dicey. I think we'll still be able to do our segment 1 or 2 of the weeks, but
it doesn't have to be on Fridays. I mean, we can do it whenever to make this work. But I mean, you're still going to be pretty communicative, or how is it going to be when you're in India?
Yeah,
because I hear they have iPhones. I saw Chris Patel put out a chart on Twitter. They got iPhones over there.
Yeah, I need to get internet service there. I'm talking to my people to hook me up with like 5G or whatever they have. But 6 p.m. my time will be the market open in the States.
Okay.
So that's 6 to 8 p.m. every day. I'm going to have a room set up, and some days it's going to be crazy to do the 6 to 8 p.m. But I think I'm only there for 2 weeks. For the majority of the 2 weeks, 6 to 8 p.m. I should be good to go my time. So.
And you have most of the family over there still, I assume?
Yeah, like all of the family, all of them are in India. So
aside from mom, dad, sister, whatever it is.
Yeah. I'm happy to be back. It's been 5 years. You know, there's a certain magic of being in India, dude. There's a certain magic of just walking on the streets, and like it's one of those things I really, really don't take for granted.
How much Hindi do you speak?
Oh, I speak a lot of it. I sound like a gringo when I speak it, and they all know. Like I'll walk into a store and I'll like ask for something in Hindi, and I can tell these motherfuckers are getting ready to upcharge me. But I don't care.
So these are the little things that I learned because my college roommate was from New Delhi. So, mera naam TJ hai. How did I do? Not bad?
Yeah, it's good. You said my name is TJ. I love it.
Right? And then I know something called loon.
That's a bad word, right?
Yeah, and then Ben Chut.
Oh, that's the worst word. So
and then when Encore and Nitin were fighting, I would hear this haramzada every once in a while. So what's going on there, Amit? And they said it was such a tone that it didn't sound like they were saying, "Do you want to go grab coffee at Starbucks?" So those are the things that I learned in Hindi, and I feel like the only one with the Meranan PJ was like I'm on track with that one.
Yeah, the banjo one is funny because when I was growing up, my dad has like major road rage. So he'd be in the car driving me to school, and he would, and someone honks or he was like banjo. That means that basically is mother effer in Hindi.
Okay.
But in Hindi, like when you say it, it's like you say it. People will casually say mother effer in America. It's like even CEOs say it. It's like casual. In Hindi, banjo is casual. When you say it, you're basically telling someone like, I want to kill you. Like it's like very intense when you say it, So it's like there's a certain tone to it. But yeah, everyone says it there. So
And this guy Encore, how y'all like some of y'all had the accent, right? So Encore could still do the little. I can't even attempt to do the little Indian voice thing. So we go to McDonald's and he'd be like, "I want to order some chicken nuggets. I want to use my card of credit." And dude, the fucking lady was just like trying her best to understand what the fuck he was saying. And he didn't even have an accent. I mean, he was born over here. I think he might have been born over there and they came when he was real little.
The sad thing is I don't have an accent either. Like I try to have an accent when I try to do Hindi, but my accent is so bad. Like people call me a fake Indian when I try my accent. It's so bad.
Well, you're Americanized, bro. Juke pivot that one.
Juke.
To make a move intended to deceive an opponent.
Football.
So either these stocks going up are juking us right now, or we actually are going higher. Palantir is either juking us right now, or it's going to stay there. So
See, I did this, and you didn't know what it was. I mean, it tells me you didn't play Little League football, man.
Honestly,
juke and pivot. That's like what they teach you as a running back. Juke and pivot.
I don't think I could have ever played football, dude. Football, like I don't. It's so physical, so intense. But basketball, I love basketball.
Yeah, I
have you ever watched cricket? Have you seen that sport?
Yeah, it's the one where they like throw it in the ground first and try to hit it with this weird looking bat thing. Yeah,
in India they love that game, and I've just never.
I don't understand it though, but it looks intense. And I saw this documentary on Hope Solo last night on Netflix.
Mm-hmm.
Well, they blackballed the living shit out of such a beautiful woman too. Like, because I remember when I used to follow the team, because I mean they were like very popular. And I was like, dude, like, what's that hot lady playing soccer, the goalie, dude? And I don't know what happened. She started fighting for like equal pay or something. And she had said some things back in the day about because they didn't use her for one of the matches in the World Cup. They wanted to use this other lady instead. And so the team essentially didn't like her, and she doesn't have any communication with any of the teammates.
Yeah.
Shit happens, brother. I got to run, man. I appreciate each and every one of you guys for tuning in. My wife's blowing me up, brother. I got to go.
All right. Thank you, TJ. TJ's Twitter is in the chat. You can check him out. Bye, TJ. Talk later. All right, cool. All right, guys, that's it for me. So the market is tanking right now. We got a little bit of that Friday volatility on the day. Bitcoin right here, just below 63,000, Robin at 2237. S&P getting to 565. I hope we close above that level. That would be nice. GameStop, someone bought $92 million worth of GameStop. That's why that was up 8%. Now it's up 4%. I don't know if that's that big of a deal. At the end of the day, you've got people buying it in the dark pools, but we'll see if that helps GameStop at all, but that's up about 5%. Tesla down 3%, Shopify down 2%, FedEx down 15%. That one's getting hit. Starbucks down about a 0.3%. CrowdStrike still up 4% of the day. And then Palantir also not selling off that aggressive. I mean, it's down 2%, but really not as much as you would think based on the headline. So we do have a little bit of some volatility here. 11:15. We'll see how the market turns out by 3:45 when I'll be back for the market close. But overall, we got the market down just a little bit here on the day again. Robin at 22.35, Palantir at 36.15, and then S&P at 5.65. I will be on Farzad's channel at 1 p.m. Central, 2 p.m. Eastern. I'll put that link in the chat. I don't really know what we're going to talk about. He just had to come on, and I guess he's going to ask about Palantir. So if you guys want to watch that out, his channel is here in the chat. He is a big Tesla guy. So we'll talk about Palantir. And that's pretty much it. What do you do between market open stream and market close? I read about Amazon's operating income. That's no, seriously. I mean, it's really just, it's more content. It's a lot of Twitter. It's reading a lot of stuff. I eat lunch. Honestly, what I've been doing for the past couple of weeks is I made this joke with my mom. It's so funny. So I still live with my parents. So downstairs, like I clean the kitchen. Like I legit, I vacuum, I mop, I do the dishes, all that stuff. That takes about 30 minutes. And I was telling my mom the other day, she was dying laughing. I was like, Mom, every time you come home to a clean house. Fucking I spray Febreze in the air and shit. Cause I like when it's clean downstairs. And I don't like when it's like a mess. And my mom, my dad, and my sister, they're hustling and bustling in the morning and they leave the kitchen a mess. And so I'm like, Mom, kind of feel like a housewife here. I'm like, after I clean the kitchen, I like take a seat. I'm like, man, that was a lot of work. I'm tired. And my mom started dying, dude, because that's what she did for like 15 years, right? So like clean the dishes. Like, this is what your mom, when I'm at school, all that shit. So she was laughing because I was like, damn, I'm like kind of tired after I clean the kitchen. Like I need to take a 10-minute break. And she was like, now you know how I felt for 10 years. So yeah, that's what I do. But no, the life of, I was thinking of making a vlog one day of like my day-to-day life and like showing what happens between the market open, market close. It's a lot of content, dude. It's a lot of content. It's a lot of Twitter. Like I barely tweeted all morning because like the thing is about Twitter, to grow on Twitter, you need to keep posting. And for 6 hours of the day, I can't be on Twitter, and really post, because market opens 3 hours, market close, call it 2-3 hours. So for those 5-6 hours of the day, I can't really actively post. So when I get off the streams, that's when there's a lot of messages and comments and I have to respond to all this stuff and keep posting and keep going from there. And that's how you grow. You're constantly in this. That's why when people say, hey, how do you do content? Hey, I want to get into content. I'm like, are you ready to spend 4 or 5 hours just glued to a screen looking at stuff that's interesting enough to talk about? Like that's why when TJ said, oh, you're an encyclopedia, it's about condensing. It's like an LLM, right? Internally, you want to train your mind on so much information, because at any given moment, if someone asks about something and or a topic comes up, you want to be able to speak on it. And the only way to speak on it is to have the knowledge. The only way to have the knowledge is to actually study it, or at least like care about it. And that's kind of a 24-hour job, to be honest. All right, that's it for me. Thank you, everybody. Appreciate you guys. I'll see you at 3:45. Maybe Steve will join the market close. We'll get his thoughts on the market, and we'll end out this week. And then 11 p.m. tonight, we'll have Palantir Weekly as well, and keep going from there. All right, have a good one, everybody. I'll see you guys at 3:45 for the market close. Bye, everyone.